Yes, people, a very happy to all of you. So, guys, we're doing this chapter called as preparation of the financial statement of a company. In the last class, we have completed a discussion on how to prepare the statement of profit and loss, which is a format mentioned in part 2 of schedule 3 of Companies Act 2013. Wonderful. So I give you two questions. Fifth question was basically to summarize all the questions from 1 to 4. 1, 2, 3, 4. We did 4 individual questions. So in the fifth question, I asked you to summarize the entire P&L in one shot. Then I give you two questions as homework 6 and 7. Correct? So a lot of you have not done the homework. Couple of you have done only 6. Some problem with 7. I don't know what. Some people have done both 6 and 7. So all those who have done 6 and 7 both, or those who have done 6 alone, do you have any problem in preparing the statement of profit and loss? Online people, do you have any problem in preparing the statement of profit and loss? Please tell me.
Sir.
Everybody. Others, please open your mouth like this. Open your mouth and answer. No problem?
No, sir.
Okay. So today, my target is to start a discussion on the format of the balance sheet. But before that, let's do a quick recap of the entire format of the P&L. So P&L begins with what is the first item? Income item. What is the first income item? Revenue
from
operations.
With that, what do you add?
Other income.
Other income. And what do you get?
Total income.
Total income. And we call this as A. Okay. Next. Item of expenses. So under expenses, what is the first item?
Cost of
Cost of
material.
material
Cost
consumed.
of material consumed. Very good. What is the formula for cost of material consumed?
Opening stock plus
Stock
purchase
of raw
minus
material
closing
plus
stock.
Purchase minus closing stock.
purchases of raw material plus minus
stock.
closing stock of raw material. Very good. Then
Purchase of stock.
Purchase of stock and trade.
purchase of stock and trade. Very good. Then
Changes in inventory.
changes in inventory of what?
Work in
Finished
progress.
goods, work in progress, stock and trade.
Stock and trade. Formula for this is
Opening
opening
minus
stock
closing.
minus closing stock. If the answer is positive, expense. Negative means
Reversal of expense.
the breakup of all this item, where will you give it? In the notes to account. Next item.
Employee benefit.
Employee benefit
Only
expense.
you said no. Cheating. Employee benefit. Employee benefit expenses. Okay. Then
Finance cost.
Okay. Then
Depreciation,
Amortization.
and amortization. Then
Other income.
other expenses.
expenses.
Very good. This is called as total expenses B. Now what is the next item? Profit before exceptional and extraordinary items, which is A minus B. From this, what am I supposed to do? Adjust the extraordinary and exceptional items. Exceptional items separately, extraordinary items separately, but I'm doing it together here. So plus or minus extraordinary items and exceptional items. What do we get?
Profit before tax.
Profit
Before tax.
tax. Profit before tax. From that, we have to minus
Tax expense.
profit after tax.
Tax.
Is this the proper format of the schedule 3? No, because in this, you have something in between. Something which is pertaining to the discontinuing operation. So this I have not discussed. There's a separate accounting standard by name, Accounting Standard 24, which talks about the accounting for discontinued operation. So I'll be discussing this topic here. That is when I can give you a proper clarity of what this item is here. But as of now, I've incorporated this in the format I'm given. But we can discuss this when we come across the particular accounting standard. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Now, the way I am writing this format of the P&L here on the whiteboard, the same way you have to practice this format at home also. The more you write and practice, the more you become clear. That day, when you write the entire P&L format along with the notes without forgetting anything, that is the day when you have properly revised and you have properly registered each and every item in your mind. Until then, keep on revising, keep on practicing. Am I loud and clear? Now, this is the format of the profit and loss, which is mentioned in the part 2 of Schedule 3 of Companies Act 2013. Now we have to head forward to see the format of the balance sheet, which is mentioned in the part 1 of the Schedule 3 of Companies Act 2013. My question goes to all of you. We are preparing this financial statement for which division of companies? Those companies got to follow accounting standard. For those companies to whom accounting standard is applicable, they are coming under division 1. And for those people, the format of the financial statement is what we are discussing here. Am I loud and clear? Now here, you have to first mention the name of the company, followed by balance sheet as at this particular date. You know very well how to do it. Here, it is very important to give the information that the figures that you're showing here are in thousands, lakhs, millions, crores, what it is, you have to give a description here. When we come across a practical question, or maybe if I'll show some live, what you call annual report, financial statement, how the company is doing it, so I'll show a presentation, you'll understand in a better way. So now let's go forward to understand the balance sheet. So before I discuss this balance sheet extensively with you, I want to discuss the balance sheet what we used to prepare for sole proprietorship concern and partnership concern. Under sole proprietorship concern and the partnership concern, the balance sheet what we prepared was T-shaped. Do you agree with me? Where in left hand side we used to record all the liabilities and the right hand side we used to record all the information about the assets. If I am preparing the balance sheet of a partnership firm, right, I will present something called as capital account here. Do you agree with me? I'll present information here called as capital account. And how do we have the habit of writing the name of the partner's capital account? Below that, A's capital account, B's capital account, C's capital account. The list will go on. In a partnership firm, can you please tell me how many maximum partners could be added? 50 partners could be added, correct? So if I have 50 partners in a partnership firm, can I say I have to continuously write 50 names in the balance sheet? Yes or no? Hello? Yes? What? No? What? She's doing wrong. If there are 50 partners, then you're supposed to write partners capital account on the face of the balance sheet. No, that's what we've learned in the CA Foundation. So if I have a firm in which there are 50 partners, then 50 partners capital account I have to write one after the other. Please tell me in that case, this balance sheet will run for how many pages? More than one page. More than one page. Correct? Only people. Do you agree with me?
Yes, sir.
Yes, sir.
Then we have something called as reserves. Under reserves, you have multiple type of reserves. You have investment fluctuation reserve. You have workman compensation reserve. You have something called as general reserve, revaluation reserve. So many types of reserves. If there are 10 types of reserves, again 10 different line. 50 line of capital, 10 line of reserves. Then we have so many other liabilities coming down one after the other, which means this balance sheet can go for more than one page. Correct? No? Similarly, if I come on the asset side, we have the list of all the assets. We have the list of all the assets. Let's suppose we have 10 to 15 category of asset, like vehicle is one category, plant and machinery is one category, furniture is one category, office equipment is one category, land is one category, building is one category. Like for that, tangibles, intangibles, again, can I say possibly 10 to 20 line items are possible there? So there are also 10 to 20 lines if I write, then we have so many other assets. This balance sheet is definitely bound to go for how many pages? More than one page, sometimes 2 or 3 pages. Correct? No? One person reading the balance sheet for several pages, one person reading the P&L for several pages. Is it right? Because accounting is a systematic process of identifying a business financial transaction, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance, trading P&L, balance sheet. Summarizing. Summary means what? It should be a short information which gives us a bird's eye view. So if I give you a balance sheet which is running for several pages, what summary is that? Does that even make sense? Hence, this was a big problem in the format of the financial statement of a sole proprietorship concern and the partnership concern. Are you able to understand? I'm trying to tell you my problem. This problem, Schedule 3 was knowing, Companies Act was knowing, Companies Law was knowing, and they are now trying to resolve this issue. Are you able to understand this problem first of all? That this balance sheet format, though we call it as a summary, but it runs for several pages. You all agree with me, yes or no? No energy. Yes. Okay. Second problem. In the balance sheet, you have the habit of writing all the liabilities one after the other. Am I right or wrong? You have the habit of writing liabilities one after the other. Let's suppose my external liability is 10 lakh rupees. Here on the asset side, you have the habit of writing all the assets in one after the other. There's no order. There's no categorization. Correct? No? in the financial statement of a sole proprietorship concern or a partnership concern, do we have a categorization? Current asset, non-current asset, current liability, non-current liability. Any categorization is there? No. You write all the items one after the other. So like that, all the assets put together is, let's say, 30 lakh rupees. Internal liability means what? Capital is 20 lakh rupees. Total is 30 or not? Total is 30 lakh? Yes. Now, all of you have studied invariably a chapter called as accounting ratio analysis in your 12th standard. Be it a CBSE student, be it a matriculation student, you have studied something called as ratio analysis or accounting ratios. In that, the very first ratio everybody will study is current ratio. What is the formula for current ratio? Current asset by current liability. What is the purpose of this ratio? The purpose of this ratio is to identify how much money is available with me in next 1 year. How much money is available with me next 1 year to pay the money in next 1 year. Current liability means what? The money that I have to pay. Current liability means what? The money that I have to pay next 1 year. What is current asset? The money that I have to receive in next 1 year. This information is not there in the format of your sole proprietorship concern and the partnership concern. Do you agree with me? Now, as a owner of the business, I want to know that to pay this 10 lakh rupees, do I have sufficient current asset or not? Is this format helping me to understand that? As a owner, I want to know. I'm asking my accountant, we have to pay 10 lakhs in next 1 year. For that, do you have sufficient money? That fellow, what for it? Yes, sir, it is there, sir. He'll coolly say and walk off. Tomorrow, if money is not there, if there's a shortfall, who has to sit and cry? The owner has to sit and cry. Where will he go for the last moment arrangement? Imagine it's 30 lakh rupees. 28 lakh rupees is what? Fixed assets. Oh my God. So what is the remaining asset? 2 lakh rupees we call it as a current asset. Means I have to pay next year 10 lakh rupees. Imagine all this current external liabilities, current liability. Means what? I'm not explaining you what is current asset. I'm not explaining you what is current liability. Everything I'll do now. I'm just trying to give an idea. I'm telling you that this 10 lakh rupees is the money that I have to pay next 1 year. Okay. 2 lakh rupees is the money available to me next 1 year. My position of the balance sheet, the position of my business is safe or risky? Safe or risky? Risky. Why risky? I have to pay 10 lakh rupees in next 1 year. And how much money as of now I have to pay next 1 year? Only 2 lakh rupees. Oh my God. And when are you getting to know this information? I got to know on the date of payment. I have to make payment tomorrow 10 lakh rupees. Today I have only 10 lakh rupees. Oh my God. Had this information come to you 1 year ago, can I say you would have had resources to make arrangements? You would have had time to make arrangements. So this was the second problem, that this balance sheet is not having any categorization. So I am unable to understand how much money I have to pay in next 1 year, and against that, how much money I already have to pay in next 1 year. If there is a shortfall, how do I arrange for that money? I'm not getting any visibility. If I give you this information that, sir, you have to pay 10 lakh tomorrow, and now you have only 2 lakh rupees. If I give information tomorrow, you only have 1 day to arrange the money. Can I say you'll be under tremendous stress? But the same piece of information, if I had given to you 1 year ago, had I given this information 1 year ago, can I say you have 1 year of time to make the arrangements? Yes or no? Yes. Hence, the second problem was that this format of the balance sheet did not have any categorization, and the users of financial statement could not take some decisions based on this format. Hence, they had to revamp the entire structure of the balance sheet. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Now, when we
Yes, sir.
started P&L, we were all clear that our users of financial statement do not understand what is debit and credit. They don't understand T-shaped account. So they wanted statement format. Statement format means vertical format. Revenue, then expense. Same way, balance sheet also they said that we'll do statement format. One will be liability, then assets. So we converted the balance sheet from horizontal format to vertical format. Am I loud and clear? So now how does the balance sheet looks like? The balance sheet looks like this. You will start with something called as equity and liabilities. You will have the total of that. And then we have second part of the balance sheet, which has got assets and then total of assets. So again, we have a vertical format. So earlier we used to have horizontal format, liability, asset, horizontal format. Now it is liability and asset, vertical format. Any doubts, online people?
No, sir.
Sir.
Any doubts, offline
No,
people?
sir.
Now let's understand each and every item one by one. Guys, now the heading is no longer liabilities. It is now equity and liabilities, because here liabilities of two types. One is internal liability, second is external liability. Where did we study this? Once we studied in 11th standard, second time we studied this in the CA foundation. Equity is called as internal liability. What is internal liability? The liability that we owe to the owner is called as internal liability, and the liability that we owe to the external people are called as external liability. Now the term internal liability is redrafted and it is called as equity. It is not equities, it is singular equity, but liability is plural. Equity here means not equity share capital. People think equity here means equity share capital. No, equity here means owner's fund, owner's money. Am I loud and clear? Am I loud and clear?
Yes,
Whenever
sir.
I ask the question, what are you supposed to do? Open your mouth and respond. On the contrary, you ask me something, if I don't respond, how will you feel? How will you feel? You ask me some question, I don't respond. How will you feel? Good, bad? Feel like crying, sir? Tell. Hello. Kirtan, how many doubts you've asked me? எவ்வளவு கேட்டது தெரியுமா? 12th இருந்து விடவே இல்லை நீங்க. அந்த questions எல்லாம் ஆன்சர் பண்ணாம விட்டுருந்தேன்னா how would you feel? Very happy, sad, I'll cry, sir. You'll cry, sir. அப்ப உனக்கு ஒரு ரூல், எனக்கு ஒரு ரூல். அப்ப I also can cry, no? Correct, no? Prathik sir cries, will you all like it? நான் அழுத நல்லா இருக்குமா? காமெடியா இருக்கும். You want to laugh on me? Donkey fellow. Now, under equity and liabilities, we have multiple broad categories. How many broad categories? 4 broad categories. How many categories? 4 broad categories. 2 category for equity, 2 category for liability. How many category for equity? 2 category for equity, 2 category for liability. So what are the 4 broad categories, sir? Very simple. We have something called as share capital. We have something called as share capital. Okay. What is that, sir? I'll explain. Second is what? Share application money pending allotment. Share application money pending allotment. Third is non-current liability. Non-current liability, meaning I'll explain. Last is current liability. Last is current liability. So we have under equity and liabilities, how many broad classification? 4 broad classification. In that, first one is share capital. Second is share application money pending allotment. Third is non-current liability. Fourth is current liability. In that, my discussion first point is, sorry, my mistake. It is not share capital, it is shareholders funds. Oh my God. Emotional flow. Share capital shoulder. Shareholders fund. Oh my God, sir. Starting a damage. Sorry. First is called as shareholders fund. This is called as shareholders fund. Second is what? Share application money pending allotment. Third is non-current liability. Fourth is current liability. Now each of the 4 categories got subcategory. Now each of the subcategory one by one we will discuss. Under shareholders funds, people, under shareholders funds, the very first item that we're going to discuss is share capital. Share capital. Second item is what? Reserves and surplus. Third is money received against share warrants. First item is share capital. Share capital. Looking at this word, what comes to your mind? Share capital means, what does strike you? Sir, here you're trying to give information pertaining to the capital. There are how many types of capital in the companies? 2 types of capital. Where did you study this? In CA foundation once, and before that, not 11th. Hello, who said 11th? 12th. 12th only we studied company accounts. After that, one more time you got opportunity where in CA foundation. Can I take 12th CBC CA foundation one more time in CA Inter? If I take, what will happen? Inter portions we cannot complete on time. So share capital means what? We're talking about the classification of preference share capital and equity share capital. So now here the total capital will reflect here. The breakup of this we have to give now, because as the user of financial statement, I want to know that this share capital comprises of how many different types of capital. So for that we have to go to where? Notes to account, for the explanation purpose or classification purpose. Notes to accounts. Note number 1, share capital. Particulars, current year data, previous year data. Now listen to me very carefully. What you have studied in 12th standard or CA foundation versus what we are going to study now under share capital. This is a small change. What it is, I'll tell you. So please listen to me very, very carefully. The first category is what? Authorized capital category. My question goes to all of you. What is the meaning of authorized capital? Correct. So this is the maximum capital of the company. This is the maximum capital of the company. That is when the company is registering, it has to submit 4 documents. We have studied in CA Foundation that if a company is registering with ROC, it has to submit 4 documents. What is the first document? Memorandum of Association. Very good. Second, we have to submit Article of Association. Third, consent to act as a first director. Fourth one, declaration by the director that all the rules and regulations have been complied with. This we have studied where in the CA Foundation company accounts. Correct? No. In the first document, Memorandum of Association, we have to submit 6 clauses. In that, there's one clause called as capital clause. In that, you have to mention that this particular business which you're doing under this company, what is the maximum capital that you wanted? You have to disclose it. So if I'm starting KVA Limited, Kalpavrish Academy Limited, I have to tell ROC. ROC is the person to whom I'm submitting the document. ROC is coming under MCA, Ministry of Corporate Affairs. Correct? It is a body of the government. Okay. So I have to tell ROC that I want 20 lakh rupees capital. I want 50 lakh rupees capital. I need 1 crore capital. Whatever you want, you say. And on that, you have to pay stamp duty fee that you'll study better in the law subject. Once I record, let's say 20 lakh rupees authorized capital, which means when I issue the shares, I cannot issue 1 rupee more than 20 lakh rupees, which means this is the maximum capital that you can raise during the lifetime of the company. So when you started the company, you thought 20 lakh is sufficient and you recorded authorized capital as 20 lakh rupees. Okay. Later, after 5 years, now you felt that I have to increase the capital because I want to expand in multiple cities. I want to bring in more capital. Can I bring in more capital? The answer is yes. But what are you supposed to do? Change the authorized capital. You have to submit the Memorandum of Association one more time after making the change in the authorized capital clause. About this, you'll study in detail where? In law. About this, you'll study in detail where? In law. So you can amend the Memorandum of Association capital clause. You can increase authorized capital limit, and only then you can collect money from the shareholders. So authorized capital is typically the maximum capital that the company can raise during its lifetime. Correct? Now, under this, you have to mention that this company has got how many types or how many classes of share. The right word is what? Class of share. Correct? Yes, we have something called as standard 1, standard 2, standard 3 when you study in school. Class 1, class 2, class 3 up to class 12. Like that, here the shares also have classes. How many classes of shares are possible? How many classes of shares possible? 1, 2 or more than 2? I asked how many class possible. No explanation. 2. More than 2. ஏமா நீ பிரேக்கப் போவும் சொல்ற அப்ப 2 சொல்லி நிப்பாட்டிடியமா. So here there can be n number of classes. Equity and preference is 2 category, but in preference I can have multiple class. Sir, what is meant by class? If I am issuing a preference share called as 9% preference share, all of you know what is preference share? What is the difference between equity and preference share? So the preference share has got two preferential rights. What are those 2 preferential rights? Right to receive dividend first and right to receive the capital in the event of winding up of the company. These 2 points where did we study in CA Foundation? Can I take all this point in detail here one more time? Not possible. So all these people are thinking that I've cleared CA Foundation, I'll forget everything. I don't want load in my memory. My dear, whatever you're studying in CA, from 11th standard till CA final, you cannot forget. You know, there's something called as in Excel, Control, CTRL, Alt, Delete. Control, Alt, Delete means what? Permanently delete in life. So whatever you studied in CA, permanently you can delete from your mind only when you type. Otherwise, you cannot forget it. Whatever you are studying in accounting, law, tax, everything should be here. I always tell in CA, you should have 2 things. Apart from having multiple qualities, there are 2 important qualities. One is application of mind. Second is cross application of mind. Application of mind means what? You understand the concept. When the question is twisted, you should be able to accordingly apply that concept. That is called as application minded person. Then there's something called as cross application minded person. Means what? Whatever concept you're learning here, you have to cross apply that concept in the same subject but different chapter, or in different subject altogether. So some concept what you study in accounting, you might have the application of financial management, which is a different subject altogether. This is called as cross application. So as a CA, you should have application of mind and cross application of mind. Above all, your memory should be super strong. You cannot and never forget anything. Am I loud and clear? So now, preference share, what I'm issuing is, let's suppose having a fixed dividend of 9%, then I call this as one class of share. Later, after a few years, I'm issuing another set of preference share with new fixed dividend, which is 10%. If I issue 10% preference share, this is called as another class of share. 8% preference share, another class of share. 12% preference share, another class of share. So like that, for each prefix of the fixed dividend, you have to issue and disclose the information separately as a separate class. So equity and preference are two categories, but preference can have multiple subcategory. In each category and subcategory is called as class. Am I loud and clear? Online people, am I loud and clear? Disclosure for each class of share capital. Disclosure for each class of share capital. Different classes of preference share to be treated separately. Different classes. How does the preference share have a class? 9% is one class. 10% is one class. 12% is one class. So every dividend, fixed dividend percentage changes, no? That in itself becomes class. So each share capital should be given disclosure separately. Yes, boss. No, equity share will never have any separate class. Equity share is only one class. There's no addition of class possible. When I'm talking about multiple classes, it can happen only in preference share. For equity, only one class is possible. But one thing can happen if your face value is different. If your face value is, let's suppose, initially issued is 100, later you have something 10, then that is a different case. Yes. Now there's a lot of information to it. It's too early to put in all the information here. So it will come in very organized manner. Am I loud and clear? So in this, what am I supposed to discuss? First, I have to disclose that how many number of equity shares you're going to issue. That is, how many number of equity shares are authorized. So number of equity shares, the quantity of the shares has to be disclosed. First point. Second, these quantity of shares are belong to which class? Equity or preference. You have to mention that also. And third point, what is the face value of the share? You have to disclose. So in this particular line item, how many disclosures are there? How many disclosures are there? 3 disclosures. One is quantum of the shares. Second is whether it is equity or preference. Third is the face value of each class of preference share. Am I loud and clear? And the total amount of that should be recorded in the outer column. Online people, okay, not okay?
Okay, sir.
Everybody, please open your mouth.
Okay, sir.
Okay, sir.
Have, let's suppose, authorized 20,000 number of equity shares of 10 each. So what is my equity authorized capital? 2 lakh rupees is my authorized equity share capital. Any problem? Now let's suppose 10,000 number of preference share issued, each of 10 each. How much it is? 1 lakh rupees. Any problem? So what is my authorized capital totally? 3 lakh is my total authorized capital. Will this be recorded in the face of the balance sheet, in the main balance sheet? No. Authorized capital is mere disclosure in the notes to account. This 3 lakh will never travel anywhere in the face of the balance sheet. What do you mean by face of the balance sheet? The balance sheet what you prepare. In the data what you show here, this is called as face of balance sheet. On the face of balance sheet, this 3 lakh rupees will not travel. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Then in 12th standard and CA Foundation, we learned that we have after authorized capital something called as issued capital and subscribed capital separately. Now here what they've told us, issued and subscribed will be combined together. Issued, subscribed and paid up capital will be combined together. Am I loud and clear? Let's suppose out of 20,000 equity shares, I am issuing 18,000 equity shares of 10 each. What is the meaning of issued capital? So this is that capital that is offered to public for subscription. Issued capital means it is that part of authorized capital which is offered to public for subscription. What is subscribed capital? It is that part of issued capital that is being subscribed by general public. Am I loud and clear? So out of 20,000 equity shares, how many shares are you offering to public? 18,000 shares of 10 each. How much it is? 1,80,000 rupees. Okay. Any problem here? Now, in that, if any amount is called up, but the shareholder did not pay, that is called as calls in arrear. I made the call to shareholder. Shareholder, please pay this money. I called him multiple times. He did not pay the money. That amount is called as technically calls in arrear. Calls in arrear extensively were discussed where in CA Foundation. That amount you have to subtract and show the amount finally outside column. Outer column, you have to show the final amount. Am I loud and clear? All in people, am I loud and clear?
Yes, sir.
Yes,
Now,
sir.
let's suppose 18,000 equity shares of 10 each has been subscribed by the public. In that, 8 has been called up, 8 has been paid up. Okay. Or let's keep full 10 rupees being paid up. That is means 18,000 equity shares of 10 each, full 10 rupee called and full 10 rupees supposed to be paid. Okay. So 1,80,000 rupees is supposed to be paid. In that, one shareholder holding 1,000 share did not pay the final call money. In that, one shareholder holding 1,000 share did not pay the final call of 2 rupees. So how much money is not paid? 2,000 rupees. So minus 2,000 rupees. How much does it become? 1,78,000 rupees. So this 1,80,000 is total called up capital. I've called him to pay full 10 rupees on 18,000 share. Total called up capital. In that, how much is paid up? 1,78,000 is paid up. And how much is not paid up? 2,000 is not paid up. So in our example, 20,000 equity shares of 10 each is authorized. Okay, this is authorized capital. This is authorized capital. What is issued capital? Out of this 20,000 shares, how many shares did I offer to public for subscription? 18,000 shares I offered to public. This is called as issued capital. Any problem? Then we have subscribed capital. What is subscribed capital? Whatever shares we offered to public, this much is being subscribed by the public. So how many shares are subscribed by the public in our example? Full 18,000 share of 10 each, which is 1,18,000. How much has been called up capital? So full 1,80,000 has been called up capital. Full 1,80,000 we have asked the shareholder to pay. So full 1,80,000 now becomes the called up capital. In that, the person did not pay how much money? 2,000 rupees. So minus calls in arrear 2,000 rupees. So balance 1,78,000 is called as paid up capital. So what is unpaid capital? 2,000 rupees. Are you able to understand all these terms extensively? We have discussed in the CA Foundation. I'm just doing a recap of it. Any problem here? So 1,78,000 rupees is the money that goes in the outer column. This is the amount that will travel to the face of the balance sheet. Under which category? Share capital category. Under share capital category. My question goes to all of you. When the dividend is paid, is it paid on the face value or is it paid on the paid up capital? $1 million question. Is the dividend paid on the face value or do we pay on the paid up value? It is always and always paid up on the, paid on the paid up value. The dividend is always paid on the paid up value. It is never on the face value. The logic of that you will understand in some time.
So,
Yes, boss.
so where do we account for share forfeitures?
Coming. Everything we'll discuss one by one. Shoo. Now, the two important disclosures that is being required to be shown here. The first disclosure is that whenever any shares are issued for non-cash consideration, what is the meaning of non-cash consideration? We have studied this concept where again in CA Foundation and in 12, both the places we studied. Shares or debenture issued for consideration other than cash. Means what? Normally what happens, I issue the shares, the company is issuing the shares, in return what do you get? Cash. But we saw exceptional scenarios where the company is issuing the shares, but in return, the company will not get the cash. In return, the company gets three possible things. One, it gets services. Services from whom? Either underwriter or promoter. Or you'll get service from, you will get, first is service from underwriter and promoter. Second is what? You're getting asset. You're buying any asset. Third is you're buying the ongoing business. So here, the company is issuing shares. To whom? Public. Normally in return, what do we get? Normally in return, we get cash. Then we say that shares are issued in consideration of cash, or shares are issued for cash consideration. Means what? I'm issuing shares. What am I getting in return? Consideration means what? To get something in return. Consideration means to get something in return. So when I'm issuing the shares, normally what do I get? Money, cash. But there are certain exceptional scenarios where you don't get back the cash. What do you get? You get services. Whom do you get services from? Underwriter or promoter or others. Others we never studied in the concept in the 12th of foundation. Others means very simple. Let's suppose there's one company to whom I'm giving the service consulting. So that gentleman says that if you want, I'll give cash, or if you want, I can give shares of my company. I feel getting the shares of that company is more beneficial because it is more valuable than money, cash. So now the company gave me the shares. In return, what did I give to the company? My services, my consulting I gave. So I gave consulting and I got shares of the company because I felt the shares of that company are more valuable than the money of that company. Am I clear? Second, the company will issue the shares. In return, what do you get? Asset. Means the company is issued the share against what? The land that you have purchased. So landowner said that, don't give me money. Give me shares of your company, because that landowner felt that the value of money is chiller in front of the share. This share is that potential that in future this will become 10 times, 20 times, 100 times the share will grow. So now the landowner says that I don't want your chiller money. If I get the money from you, I'll put in fixed deposit. How much money I'll get? 8% interest maximum. But if I get this 1 crore rupees shares from your business, this 1 crore worth of share in future, it can become 20 crores. So when I feel the company's share more valuable, I will demand the shares instead of money. So here the company gave shares to the public and got what? Land. So you buy the asset and in return you don't give the money, you give shares. And last one is upon purchase of the business. Purchase of the business. Companies issuing the share for what? Buying the business. All of these were extensively discussed in the CA Foundation. Am I loud and clear? Online people, am I loud and clear? Now,
Yes, sir.
if you are issuing any shares for consideration other than cash, which is non-cash consideration, you have to give the disclosure of that in the financial statement. Now, you have this concept in your CA intermediate. Now, when you are writing or solving any questions from this particular chapter, there are questions where they will say, this company has issued 50,000 equity shares of 10 each as a consideration for buying the land. So that will not come anywhere in the financial statement. But in notes to account, we have to give this in form of a disclosure. So what is the meaning of non-cash consideration? Non-cash consideration means what? I'm issuing the shares. In return, I'm not getting any cash. In return, I'm getting what? Services from the promoter, services from the underwriter, or I'm buying any asset, or I'm buying any business, ongoing business. Now, this disclosure has to be given in the financial statement only for 1 year. The shares are issued for consideration other than cash, which is non-cash consideration. Then the disclosure of this is required to give only for that year in which you are issuing the shares. So let's say in the current financial year, we are into which financial year now? We are into 24-25 financial year. We are in the financial year 24-25. Today, let's suppose if I'm issuing any share, for what? I'm buying a land, okay, in the company. Instead of giving money, what am I giving? Shares. That information I have to disclose only in the current year financial statement. I don't have to disclose in the future years. In current year alone, if I disclose, more than sufficient. Any problem? Online people, any problem?
No, sir.
No, sir.
3,000 shares are for consideration other than cash, say for business. Then in this year's financial statement, we put 18,000 shares and we change 3,000 rupees of business.
If you are okay, can I just finish this one more point and just come back to it? Guys, one more thing, I'll finish now. This is one disclosure of non-cash consideration. This is one disclosure of non-cash consideration. This one more called as disclosure of the shares issued for no cash consideration. What is no cash consideration? We have studied this again in the CA Foundation. Where in CA Foundation? Company accounts. Where in company accounts? Which chapter? There's a chapter called as bonus issue and rights issue. What is bonus issue of shares? The company is issuing the additional shares to whom? Existing shareholder, absolutely free of cost. One more time. Sir, what is bonus share? Bonus share is the issuing of additional share to the existing shareholder free of cost. We're not charging anything, which I'm giving extra shares to my existing shareholder. I'm not charging any money from them. This is called as capitalization of reserve. This is also called as capitalization of reserve. All these points I'm recapping one more time. This is called as no cash consideration. So now your Companies Act says that if any company is issuing bonus shares, you have to disclose this information. You have to disclose this information where? In your notes to accounts. The question that arises here is that for how many years? Only for that year or more than that year? Here the Schedule 3 has told that you are supposed to disclose this information for 5 years including current year, which means we are in current year 24-25. In the current year, if I've issued bonus shares, I have to disclose this information in 5 years including current year. So first year of disclosure is 24-25, then 25-26, 26-27, 27-28, 28-29. Any problem? So 5 consecutive years, including current year, this information needs to be disclosed in the financial statement. The shares are issued as bonus means what? No cash consideration. The disclosure of the same is supposed to be given for 5 years, including the year of issue. That how many aggregate number and class of shares is allotted as a fully paid bonus share. How many number of shares have issued as bonus share, and for what class of shares you allotted the bonus shares, you have to disclose. Am I loud and clear? After 5 years, what will happen? This disclosure need not be shown. You can just remove that disclosure from the notes to accounts. Am I loud and clear? Now, however, Schedule 3 does not require a company to disclose the source from which the bonus shares have been issued. In the CA Foundation, we studied the order of reserves which can be used for the purpose of issuing the bonus share. What is the first order? Capital redemption reserve. Second is capital reserve. Third is security premium reserve. Fourth is free reserve, which is general, and then P&L. So from these reserves, you're using the money. Those source need not be disclosed. You can get this as an MCQ. You can get this as an MCQ. Guys, all of you know the pattern of your inter exams, advanced accounting. I'll be discussing anyways in the intro video. I'll just tell you once. You have 100-mark paper. In that 70 mark is descriptive paper. How many marks is descriptive? 70 marks. Descriptive means what? You will get 2-mark question, 3-mark question, 10 mark, 15 mark, 14 mark, 18 mark, 20 mark question. This is called as descriptive. Remaining 30 mark is your MCQ. Oh my God. So like CA Foundation, we have MCQ here. The answer is yes. Like CA Foundation, we have negative marking there. Here do we have negative marking? The answer is no. Inter challenging. Or MCQ comes with negative marking, na Govinda, oh Govinda only. So here there's no negative marking, but the MCQ what they're going to ask is going to be, the answers are going to be very, very resembling to one another. If you're not clear with the concept, if you're not clear with the points to the core level, you will not be able to get the right answer. So MCQ 30 mark is a jackpot, provided you understand the concept logically. Each and every small point they can twist and ask you. It could also be case-based MCQs. So you'll practice all that also. But I'm telling you, you cannot run away with the concepts. A lot of people think that, oh, 70-mark descriptive paper, in that I will write all the sums one after the other, step by step, I'll get the marks, I'll keep going. No. Without the help of MCQ, you cannot pass. In MCQ is one place they will try to screw in maximum possible way. In every attempt, out of 6 papers, at least 2 paper minimum, they try to screw with the MCQ. I'm telling you, 2 papers they try to screw with the MCQ. So you have to be very, very crystal clear with all the concepts. So now, I'm asking a question. Schedule 3 is requiring the company to disclose the source from which the bonus shares are issued. True or false? False. The Schedule 3 is never asking you to disclose the source of the issue of bonus share. Am I loud and clear? Online people, am I loud and clear? So we have discussed 2 concepts in disclosure. One is issue of share as no cash consideration. What is no cash consideration? I'm issuing the shares, but I'm not getting consideration in cash. Then what am I getting? I'm getting the consideration in form of services or assets or business. For this, is the disclosure required? Yes. Kanna, for no cash consideration, the disclosure is required. For how many years? Only 1 year, which is that year. For issue of bonus shares, do we need to show disclosure? Yes. That is called as, bonus issue is called as no cash consideration. No cash consideration. Are you able to follow? No cash consideration means what? No cash. I'm issuing shares. I'm getting nothing in return. No cash, no service, no asset, nothing. That is bonus issue. I'm giving the shares free of cost. There's something called as non-cash. I'm getting consideration, but it's not in cash. It is some other form, non-cash, other than cash. Are you able to follow? So bonus disclosure is required for how many years? 5 years, including current year. Am I supposed to disclose the source of bonus issue? No. Any problem here? Online people, any problem here?
No, sir.
No, sir.
Now, these are the additional notes to be disclosed. This is not there at your level. At your syllabus, it is not there, but this is there in Schedule 3. So I just wanted to go through this line item one by one. I don't expect any questions to come from this segment. This is there in the Schedule 3 format, which is being given by the Companies Act, but this is not, in depth. They don't ask it. Few points here and there I've already covered. For example, you have to disclose the number of shares. Where in the authorized category, 20,000 equity shares authorized, 10,000 preference share authorized. So the number and the amount of share, including the face value, has to be disclosed. So this point I already covered for you. Yes. Second, they're telling that the number of shares issued, subscribed and fully paid, subscribed and not fully paid. That is issued, subscribed and fully paid. Issued, subscribed and not fully paid should be separately disclosed. That also I discussed with you. Third is you have to disclose the par value, the face value. Par value is called as what? Face value for each class of share. So can I say all these 3 points I've discussed with you? Out of these many points, whatever is applicable at your level, I've already discussed. There's some point which is not applicable, though I'll read it, but I'll not go into depth because it is not there at your level. D point is what? A reconciliation of the number of shares outstanding at the beginning and at the end of the reporting period. So this is not there at your level. Then the rights and the preferences and the restrictions attaching to each class of shares, including restrictions on the distribution of dividend and repayment of capital. High level of disclosure, not at that at your level. It's like that. D, E, F will not be asked. G, shares in the company held by each shareholder holding more than 5% share, specifying the number of shares held. Now this could come at your level. Shares in the company held by each shareholder holding more than 5%. So in my company, if there is any person who's holding the shares more than 5%, let's suppose the total number of shares that I've issued is 10,000 shares. In that, there's one particular person holding, let's say, if I do let's say 600 shares. There's one particular gentleman called Mr. X holding 600 share. Rest all people are holding 100 share, 200 share, 300 share, 400 share. Like that, they are a different shareholding pattern. Now there's a shareholder holding 600 shares. So how much percentage of holding is he having? 6%. 600 divided by 10,000 into 100 if I do. How much am I getting? 6%. So can I say his holding is more than 5%? Then you have to disclose this person's name separately in the notes to accounts. Under share capital category, you have to disclose that Mr. X is holding this class of share, this many quantity of share of so much face value. You have to disclose this information separately. It is more than 5%. They never say up to 5%. More than 5%. Which means if Mr. X is holding 500 shares, do I need to disclose this information? No. Because 500 is out of 10,000. How much percentage? 5% only. It is 5% holding. So more than 5% only holding only we have to disclose. Up to 5% holding need not be disclosed. People can confuse you with more than and up to. Am I clear? Now please tell me, there's a shareholder holding 505 shares. Do I need to disclose this information in the notes to accounts? Yes. The answer is yes, because 505 out of 10,000 into 100 means how much percentage? 5.05%. So it is more than 5%. Then I have to disclose the information of this particular gentleman in the notes to accounts. It is always more than 500. So you'll highlight this particular point. Any problem? Online people, any problem?
No, sir.
If there is any call unpaid, if there is any call which is unpaid, you have to show this information separately here. And then forfeited share. What is forfeited share? What is the meaning of forfeited share? We have studied in CA Foundation that when a share is issued to a particular person, if that person does not give you the call money, the first call money, second call money, third call money, does not pay, you keep on asking, the company is asking, the person is not paying. A point will come where the company is frustrated because the company is in need of money and you're not paying the money. So what will the company do? Company will cancel the shares which is allotted to you. The shares that is allotted to you, the company will cancel it. The process of cancelling the allotted share is called as forfeiture. So the amount which is there in the forfeiture account, somebody asked online, what will you do that? Where will you show it? You will show it under capital only. You will add the forfeited amount here. The forfeited amount is being added here. Add the forfeited share amount. The forfeited share amount is being added here because that is also part of your paid up capital. That is also part of your paid up capital. Until the reissue has been done, the amount which is lying in the forfeited share account will be a part of your capital. Will be a part of your capital. Okay, not okay?
Okay, sir.
Everybody is clear? Now, all this information we are supposed to give where? Sir, in the notes to accounts. Where? Under share capital category. In that, all the information has to be given one after the other. Okay, not okay? Everybody, please open your mouth and respond. Online people.
Okay, sir.
That alone keep it pending. I'm coming to that part. So share capital part, we are ready. We are clear with it. In this, do you have any doubts?
There will be different classes of equity shares.
Equity shares will be there. That also keep on hold. I'll tell you when it is, why it is. I'll discuss. Wait. So 2 points, what you've asked, I've kept on hold. See, the lot of information I can give here, but too much of information in a very unstructured manner will not go here. So sometimes what happens, some information which is apt, I'll give detailed information here. Some information I will just inform it here, give an update here, I'll touch that concept here and go. But I'll not be able to give in-depth clarity of that here because when the right time comes, the information can be given. We have a long way to go, still a lot of points. So if I tell yes, whatever 2 questions you're asking, if I tell it is yes, then I have to support with my reasoning and analysis. That reasoning analysis is not apt at this point of time. That is why I choose to defer the queries to a future date. So apart from what is being asked, these 2 queries, do you have any doubt and difficulty in understanding what is share capital?
So for non-cash consideration, we need to disclose the source also.
Not at all.
For both.
Not required.
Non-cash,
Not required. You don't have to disclose a source of what do you call it? Source from which you have issued the shares, whether it is no cash consideration or non-cash consideration. See, for non-cash consideration, there is no source required. No, non-cash consideration, what happened? You're issuing the shares, you're getting the service and done. So where is the source required? But for bonus issue, what is happening? You're capitalizing your reserves. So which reserves you're capitalizing, that information is not required, is what the concept is trying to say. You understand the logic. Next comes what? Reserves and surplus. People think reserves and surplus both are same. Are these both same? Then if you say different, then you tell me what is the difference between reserves and surplus? Reserve, if I have to tell in layman language, local language, reserve is nothing but savings. Reserves is nothing but savings. What is surplus? Accumulated profit. In your P&L account, you have something called as net profit, correct? No? From a gross profit, if I minus all the indirect expenses, I have net profit. You learned in your 11th standard, 12th standard CA foundation that whatever net profit is there, we will transfer to capital, we'll add it. But we also studied in foundation that sometime in the sole proprietorship business and partnership business, you don't transfer the entire profit to the capital. You transfer a part of the profit to the capital and some part of the profit you keep as it is as a balance carry down. This is called as what? Accumulated profits. So if any P&L account has got a balance, if the ledger balance is there, that is called as accumulated profits. So this is nothing but, surplus is nothing but the balance of the P&L account, which is accumulated over a period of multiple years. Am I clear of this part? So surplus means what? Surplus ka another name is retained earnings. So I'll be discussing all that one by one. So let's talk about reserves first. Then I'll come back to surplus. What is the meaning of reserves? So reserves in layman language is nothing but savings. Now savings, what we do is of 2 types. One is called as general saving. One is called as a specific saving. So let's suppose your parents earn 1 lakh rupee a month. Example. Now in that, they'll spend some money. Let's say they're spending 40,000 rupees in a month for all the expenditures that is required to be done on monthly basis. So what are you left with? How much money are you left with? So 60,000 rupees balance we are left with. Now my question is the 60,000 rupees, what your parents will do? They'll put the 60,000 rupees in multiple categories. 10,000 rupees they'll put in the general savings category. Means what? From this 10,000 rupees, whatever money is required for whatever time, for whatever purpose, we can use it. Anytime, anywhere, I'll use this money. 10,000 gone. So what is it? What am I remaining with? 50,000 rupees. Then in that 50,000 rupees, what is your parent doing? Your parent want to buy a car. Let's say sedan they want to buy. So every month out of this 50,000 rupees, they are saving 10,000 rupees for buying the car. So let me put it on the whiteboard for more clarification purpose. So let's say there's a person who's earning 1 lakh rupees. In that 40,000 rupees is his monthly expenditure. What is he left with? 60,000 rupees. Now here he is putting 10,000 rupees in the general savings account. Means what? I can use this 10,000 for any purpose which I feel like at that moment. How am I left with? How much am I left with? Remaining 50,000 rupees. Now this I put in multiple categories. 10,000 rupees I put in a special savings called as car savings account. Means this money what I'm putting in this car account, I'll use only for the purpose of buying car and not for any other purpose. So this becomes my specific savings. 20,000 rupees your parents are saving monthly for constructing the house. Means whatever money is going in this house account, I'll use only for the purpose of construction of the house, not for any other purposes. 20,000 rupees your parents are saving for medical emergencies. Means if there is any medical emergency, I'll use the money from this savings and not from any other savings. Obviously, when the money is not sufficient, you might use your general saving first and then you might come back to these both. But still, this is a specific savings. In the same manner, we also in the business have the habit of saving the money. The term what we here use is called as reserves. So we have something called as general reserve. Means what? We can use this money for any purpose that is required in the business. That is called as general reserve. And if you reserve any money for a specific purpose, it is called as specific reserve, which means you can use that money only for that purpose and not for any other purpose. Am I loud and clear? Online people, am I loud and clear with this point?
Yes, sir.
Now,
Yes, sir.
this reserves, whether it is general reserve or specific reserve, is categorized under two broad categories. I'm talking about the reserves being categorized under two categories. One is called as non-free reserve. Second is called as a free reserve. Now the reserves is categorized into how many categories? Two categories. Reserves is categorized into how many categories? Two categories. One we called as non-free reserve. Second is called as free reserve. So what is the meaning of free and non-free, sir? Very simple. Free reserves are those reserves which are freely available for distribution as dividend. When I say some reserve as a free reserve means from that reserve, whenever the company wants, they can distribute that money to the shareholders in form of dividend. What is the meaning of dividend? It is nothing but the share of profit. Like in partnership, we have something called share of profit. No, the profit what you get in the business, you distribute to the partners in the profit sharing ratio. So in the company, the profit is not called as profit here. The profit that we give to the shareholders are called as dividend. So free reserves means those reserves from where I can distribute the money freely as dividend to the shareholder and nobody can question me. That is called as a free reserve. Am I loud and clear? So then what is non-free reserve? Non-free reserves are those category of reserves which are not freely available for distribution as dividend, which means from that reserve, I cannot take the money and give as a dividend to the shareholder. I cannot use that reserve for distribution as dividend. You have to use that reserve for the specific purpose which the law has created. For what purpose you have created that reserve, only for that purpose you can use the reserve and you cannot give it to the shareholder as a distribution of dividend. Am I loud and clear? Let me first talk about the security premium reserve. This is something which you are familiar since 12th standard. Correct? There's one section that we have learned with the security premium reserve. Section 52, subsection 2. Very good. We studied this twice. Once in 12th CBC, second in CA Foundation. Called as utilization of security premium reserve. Utilization of security premium reserve. That is the money that you collect against the security premium, how you can utilize them. So section 52 subsection 2 has given how many utilizations? 5 utilizations. Means whatever money is lying in the security premium account, you can use it only for those 5 purposes and not apart from that. In those 5 purposes, can I use the premium for the purpose of distribution of dividend? The answer is no. The law does not permit you to use the security premium for the purpose of distribution of dividend. And hence this becomes my locked reserve. This becomes my non-free reserve. Free reserve means what? I can use that reserve for giving as dividend. I can distribute that money freely to my shareholders. But when any reserve is created, which I cannot distribute that freely to my shareholders in form of dividend, then we call that as non-free reserve. Then you may ask a question, then what is the purpose of issuing the shares at premium, sir? We come across this term called as shares issued at premium. The company is issued 10,000 shares of 10 each at a premium of 1 rupee. So how much money have you collected towards capital? 10,000 to 10, 1 lakh, and then 10,000 into 1, 10,000 rupees. So this 1 lakh goes to your share capital, and this 10,000 will go to your security premium reserve. So this 1 lakh rupees, I can use that money for the expansion of the business. Nobody can question. But sir, this 10,000 rupees, what is there in SPR account? If I cannot use it for the development of the business, if I cannot use it for the purpose of distribution of dividend, what will I do with this 10,000? The company was asking the law. So law said that through section 52 subsection 2, that you can utilize this security premium account only for the purpose of those 5 reasons. What is the first reason? You can issue the, you can use the security premium reserve. You can utilize the security premium reserve for issuing fully paid bonus share. This we discussed in CA Foundation. Second, you can issue the security premium, or you can utilize the security premium for writing off of preliminary expenses, loss or discount on issue of debentures, for writing off of the underwriting commission. Like that, they mentioned 5 reasons and 5 purposes, which means whatever the money is parked in the SPR account, you have to use for these 5 purposes and not apart from any of these 5. Am I loud and clear? Then there's something called as capital redemption reserve. All of you studied this somewhere in your CA Foundation. Tell me where. Section 55. Very good. For what purposes? CRR was coming in which concept? Bonus issue, rights issue, redemption of preferential, redemption of debenture. Where? Redemption of preference share capital. To keep the capital intact. What are we supposed to do? We have to transfer the money from free reserves to CRR account. What is the purpose of CRR account? To issue for bonus shares in the future. So whatever money is parked in the CRR account, can I use it for the purpose of distribution of dividend? The answer is no. You can use it only for the purpose of issuing bonus shares. So please tell me, people. My question goes to data entry people. Imagine had I not given you the basic classes. What would have been your plight today? Do you think I'll be able to discuss capital reserve, capital redemption reserve, security premium reserve, debenture redemption reserve, revaluation reserve in depth? Is it possible to be discussed? Not possible, because all this has been covered where? In the foundation. So as a faculty of the CA intermediate level, if I keep on discussing all the points at the foundation level one more time, we will not have time to complete the CA intermediate portions on time. Correct? At the max, any faculty, what they can do a recap of the concept, but not to teach the entire concept in one more shot. So if anybody is still not clear with what are these are different types of reserves, my humble request is go back. I've given the foundation classes to all of you. Please go and watch it. You will get a complete clarity at that stage. What are we doing now? We are trying to learn the format of the financial statement. Each and every item not possible to discuss in depth, especially those items which has already been discussed extensively in the CA foundation level. Guys, please understand what are we learning? It's not accounting. We're learning advanced accounting. In the name itself, it is advanced. Advanced means what? Which is not basic. So please, wherever you feel that the knowledge is lacking, it is only because you have skipped the CA foundation level, or you might have not studied that level properly, and hence this lack of understanding is happening. Otherwise, all this has been extensively discussed in the CA foundation classes. Capital reserve also we studied in the 12th CBSE, again in CA foundation. Can you give me one example of capital reserve? How does the capital reserve gets created? Yes. 1,000 shares were forfeited. 1,000 shares were forfeited, and all the 1,000 shares were reissued. And when we issued the shares, we issued at premium. So when this 1,000 shares were forfeited, there was a forfeiture amount. When that forfeiture amount could not be utilized, you are supposed to transfer that to an account called as capital reserve. We studied extensively multiple questions. How we transfer the money from forfeiture account to capital reserve. We discussed multiple questions based on this. So that is how the capital reserve has been created. So capital reserve, capital redemption reserve, security premium reserve, debenture redemption reserve, revaluation reserve, all these are non-free reserve. Whatever reserve is there in this respective reserve account cannot be used for the purpose of distribution of the dividend. Am I loud and clear? Debenture redemption reserve means what? These reserves can be used only for the purpose of redemption of debentures. And finally, revaluation reserve. What is revaluation reserve? When does the revaluation reserve come into picture? When you do upward revaluation of the assets. When you do upward revaluation of the assets. There's a particular asset in the balance sheet, let's say land, 1 lakh rupees, which was purchased 10 years ago. So 10 years ago, you purchased the land for 1 lakh rupees. Even in 10th year, we have how much worth of land in the books of accounts? 1 lakh only, because we follow historical cost concept. So as per historical cost concept, you always record a historical value in your financial statement. Now you want to upgrade your land value to the market value. So what is the market value? The market value of the land is 11 lakh rupees. So now the land value is increased by how many times? How many value? 10 lakh rupees. So please tell me, what will be the journal entry for this 10 lakh rupees? Very good. Land account debit to revaluation reserve. Revaluation reserve 10 lakh and 10 lakh. This we have studied very extensively in the partnership topic of the CA Foundation. Don't worry, one more time we'll be discussing when I come to the accounting standard 10. This we also discussed in the accounting standard 10 of the CA Foundation, where we did the revaluation of the tangible assets. So there also we discussed this concept. Upward revaluation, downward revaluation, there also we discussed in foundation. Again, we'll discuss one more time in the CA intermediate level when I do accounting standard 10 separately. Now, this is a revaluation reserve, 10 lakh rupees. Can I use this money for the purpose of distribution of dividend? No, because you don't have money in hand, boss. This 10 lakh rupees, what you have revalued now, it is a unrealized profit. When do you say profit is realized? This 1 lakh worth of land, if I sell for 11 lakh rupees, I have 10 lakh rupees profit in hand. No, I have profit in hand. That is called as realized profit. You use that money for the purpose of distribution of dividend, no problem. But this is what? Unrealized profit, which means profit is not there. We have just upwardly valued the assets. Can I distribute the dividend out of this? The answer is no, no, no. Sir, like other profits, why don't we take the revaluation profits to the P&L, sir? Why can't we take it to the balance sheet, sir? You should have it out here. Why are we taking this to balance sheet? Why not to P&L? Correct? No? Now here, land account debit to revaluation reserve we're doing. Are we taking this to P&L? The answer is no. We're directly taking to the balance sheet. Why not to P&L? Please tell me.
Not in the normal course of the business.
No.
It's not realized.
No. We prepare the financial statement on accrual basis. Whether we receive the money or not, we record the income. So here, even though this is not realized, on the basis of accrual concept, why can't we record this in the P&L?
It has happened over a period of years.
No. You're getting my point. Generally, let's say there's something called as cash sale. Cash sale means what? I sold the goods, I earned the income, money also received. So this is my realized profit. Okay, wow. It goes into my P&L, trading in P&L. Similarly, credit sale also is what? I sold the goods, earned the income, but money not received. So this is unrealized profit. But still, accrual concept says what? Both of them are earned. So I have to record the income in my financial statement, P&L, because we are following accrual concept. So similarly, why can't we apply this accrual concept for the revaluation reserve? Why can't we record this in P&L?
There's many ways of valuing the asset. Currently, your profit will get affected.
We actually receive the money,
No.
Sir,
No.
sir, if we record this in P&L, we may not get the information about how much amount has been revalued.
No. I'll tell you now. Okay. Imagine if every company was allowed to take the revaluation reserve profit to the P&L, then all the loss-making company, what they will do? To show as if they are in profit, Chumma, they will keep on revaluing the asset upward and show so much profit I earned, and they will try to cover their losses. Imagine there is a there's a company whose total income 1 crore, total expenses 4 crore. So what is your net loss? What is your net profit in negative? 3 crore. Now what I did is, in my balance sheet, I have an asset called as land, whose value is 25 crore. So what I did is, this is the purchase cost. I didn't want this 3 crore to be shown to my users of the financial statement. So what I did, this 25 crore worth of asset, I wantedly revalued to the market value, and I increased it by, let's say, 5 crore rupees, and it became how much? 30 crore rupees. So I increased the value of the land by 5 crores properly only, because I got a certificate from the valuer. So now if this 5 crore is allowed to be recorded here, then this 5 crores will be added here. It becomes 6 crore minus 4 crore. How much? It will show as if the company is in 2 crore profit. But is this how you show your profitability? That when land is lying idly in a business, chumma from nowhere, you made that value of the land 30 crore rupees, and now you're coming and claiming, bloody, you've got 6 crore rupees ka income, and in that 2 crore is the profit. Will you invest in such companies? No, it is deceiving. They're trying to deceive you. If you put in your money in such companies, which is a loss-making company, your money is prone to become zero. Hence, it was the responsibility of the Schedule 3 Companies Act, company law, that these kind of things should not be done. Hence, accounting standard also came into picture, which said that nothing doing these kind of reserves, which is resulting in the upward revaluation, will not be taken to the P&L, because it will unnecessarily try to cover the losses. So transparency will not be ensured, and hence it is important for us to not record the revaluation profits to the P&L account. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Now let's talk about free reserves. There are two broad categories of free reserves. One is called as dividend equalization reserve. This is not there in your syllabus, but only for namesake I've put it. In case by any chance if they give you DER, you should know that this is a free reserve, dividend equalization reserve. Second is general reserve. Third is if you have any other free reserve, you can mention that. So these are called as free reserve. Means that whatever amount is available in these reserves, you can use it freely for the purpose of distribution of dividend. Any problem? Sir, now how do we present these reserves in the notes to accounts? Now how do we present? Please understand. Let's suppose I have a security premium reserve. Okay. Now there'll be opening balance, addition, transfer, closing balance. Particulars, opening balance, addition, transfer, closing balance. This is how you have to present in the notes to accounts. So in that, the first item is, let's suppose, security premium reserve. When I started, the current financial year, the beginning of the financial year, already I had 1 lakh rupees in the security premium account. Okay. Current year, I issued further 10,000 shares at a premium of 1 rupee. What is the security premium? 10,000 rupees. So that will increase my premium. So put in addition column. Let's suppose out of this 1,10,000 rupees, I'm issuing bonus shares, fully paid bonus share for 20,000 rupees. Then that I have to minus it from the transfer column. So what is my closing balance now? 90,000 rupees my closing balance. Am I loud and clear? This you have to do for every type of reserve. Every type of reserve. That is the opening balance, during the year addition, during the year transfers, and the closing balance. Am I loud and clear? General reserve. Let's suppose in the beginning of the current year, we already had 5 lakh rupees in the general reserve. In current year, we transferred 1 lakh rupees from the P&L account to GR. So GR is increased by 1 lakh. So which column I'll put in? Addition column. I have not utilized that. So transfer is 0. So what is my closing balance? 6 lakh rupees. Any difficulties? Online people. Yes. We'll be showing this in the notes to accounts. So now, this is the notes to accounts. You have shown the final figure here. Let me erase all of this. This will be shown in notes to accounts here. So here we have multiple columns called as opening balance column. Then we have addition column. Then we have transfer or subtraction column. And finally, this will be the closing balance column. So all this information, you're supposed to show it here. Are you able to follow? So here, this is not there in your Schedule 3 format. I mean, the format which has been given here in the ICA module, it has not been covered. But what I will do is, for our understanding purpose, I'll put this in your format and give it to you. Any problem here? Any difficulty? Some companies, they do this, horizontal way of presentation: opening, addition, transfer, and closing balance. Some people do vertical format, such as opening balance, add, addition, minus transfers. Then they'll get the closing balance outside. So you can do this vertical format of presentation also, horizontal also. There is no hard and fast rule on that. Am I loud and clear? Offline people, am I loud and clear? Everybody. Online people, am I loud and clear?
Yes, sir.
Now, surplus means what? Whatever the statement of P&L you're preparing, no? In the statement of P&L, you have something called as profit after tax. From the profit after tax, what do you do normally? We have studied in the 12th standard cash flow statement, we do 4 appropriations, transfer to reserves. You from that pay interim dividend, preference dividend, equity dividend. Once you pay all the appropriation, item of appropriation, the balance which is there in the P&L account, that is called as surplus. Others who do not understand this point, don't panic. We'll be discussing the cash flow statement one more time when I do AS3 here. So that point of time, I'll teach you what is surplus, where we'll do the entire P&L one more time. So basically, whatever is the last profit of the P&L account, that we term as surplus. So opening balance of surplus means what? Whatever is the balance of the P&L from the beginning of the company up to the last year end is called as opening balance. Current year also preparing the P&L. In the current year P&L, you have the profits at the end of the year from the statement of P&L that you are supposed to add. If there is any loss in the current year, that loss we have to minus. Either you'll have the profit or loss. If profit is there, you add to the opening balance. If loss is there, you will subtract. And okay, from here you will transfer to GR. So one change. Now listen to me very carefully. Total income. What is the formula for total income? Revenue from operation plus other income. Okay. From that I minus total expenses. Those 7 categories. What will I get? Profit before exceptional and extraordinary items. From that, what do? We do plus and minus of exceptional items and extraordinary items. We get profit before tax. From that, we do adjustment for the taxes. We get profit after tax. Now, with this profit after tax, we have to do adjustments. What adjustments? This profit after tax will now go to your, now listen, there's a change here. What we studied in the 12th standard versus what we're studying now. This profit after tax is called as now surplus. Now this goes where directly to your balance sheet, where in your notes to account. So note number 2, reserves and surplus. Under that you have surplus. So listen to me very carefully. In that, what do you do? Opening balance means what? Until last year, that is when the company started till the end of the last year, the total accumulated profit of all the years is how much? Let's suppose 10 lakh rupees. In that, what is your current year profit? 2 lakh rupees. Then the 2 lakh rupees profit of current year, you will add it. So how much your total profit now becomes? 12 lakh rupees. Now from this, what happens? You are transferring this money to the savings account. You will transfer the money to GR account, general savings. You will transfer to specific reserves, such as investment fluctuation reserve, example. So in that case, what happens? Minus transfer to reserves will do. Let's suppose I'm transferring 50,000 rupees to reserves. So what is the balance now? 11,50,000 rupees. Now, whatever item of appropriation we studied in the cash flow statement of 12th standard, those appropriation now will not be done in the P&L. It will be done in your notes to accounts. The breakup of which surplus is transferred from where to where, that will be shown all in the notes to accounts. Am I loud and clear? So let's suppose I have transferred 50,000 to general reserve. No, general reserve. So when I open GR account, here, general reserve, already let's say the opening balance is 10,000 rupees. Further in current year, how much added? 50,000 current year added. So how much is the closing balance now? 60,000 rupees. So all the plus and minus which is happening in the surplus and reserves will happen in your notes to accounts. We have questions based on this. So do not panic. When the right time comes, in the right question, with the right presentation, you'll understand what needs to be done. Now, in this, if you have any doubts, please let me know. If any dividend is paid, the dividend is subtracted here in your surplus. Am I loud and clear? Now, this surplus has got 2 more names. It is called as retained earnings. Means what? The profit which is left over after transferring to reserves after giving dividend, whatever the extra surplus profit that is left over in the business is called as retained earnings. Whatever the profit is retained in the business is called as retained earning. And this is also called as SPL balance. It is called as SPL balance or profit and loss balance. These are the multiple names that they'll try to use in the question to confuse you. So do not get confused. Retained earnings is nothing but surplus. P&L is nothing but surplus. Surplus is nothing but surplus. Wow, wonderful. Less preliminary expenses. This part alone, you leave it as of now. There is one question based on that. Preliminary expenses. When that question comes, I'll explain you why the preliminary expenses subtracted from this point. Am I loud and clear? So what are we discussing, people? We are discussing reserves and surplus. In that, we're trying to discuss what is non-free reserves, what is free reserve. Sir, in the schedule 3, in the reserves and surplus notes to accounts, am I supposed to segregate this is non-free reserve, this is free reserves? Not required. You will write the reserves one after the other. Free reserves and non-free reserves I have categorized for your understanding for the examination purposes. But in schedule 3 of any company, you will never find the segregation as this is free reserve, this is non-free reserve. The segregation is not done. Am I loud and clear? The second question what you might ask is, sir, do we need to record all these reserves in any particular order? The answer is no. These reserves can be jumbled in any order, we can write it. There is no hard and fast rule. I can record the security premium reserve also first. Nobody can question me. But write all the reserves first and finally will be your surplus. So are you able to understand the difference between reserves and surplus? Reserves is your general saving or specific saving. It is coming from where? It is coming from the surplus. Surplus is nothing but the retained earning of the business, which is also called as undistributed profit. Another name of this is called as undistributed profit. The profit which is not being given to anybody, which is still there with the business, it is called as undistributed profit. So my question goes to all of you. Surplus has got how many names? 3 names. One is called as retained earning, P&L balance, and undistributed profits. Will you forget this point? Online people, will you forget this point?
No, sir.
Okay.
No,
One
sir.
question based on this, and then I will give you a break. Point number 3 and point number 4 I meant to discuss because one question will come. That is the right time to discuss this particular point. So 3 and point 4, please keep it on hold. So let's take one question. Example 1. It says that X Limited with an authorized capital of 50,000 equity shares of 10 each issued 20,000 equity shares payable. So what is the authorized number of shares of the company? 50,000. What class of share is this? Equity share class. What is the face value? 10. Issued 20,000 equity shares. So how many shares is offered to public? 20,000. Which is payable. 3 on application, 3 on allotment, 4 on first and final call. Nobody will do this question at the CA intermediate level. Nobody will do it. It's my challenge. But why I'm discussing here is because I want to set that momentum wherever possible. All the amount due were received. All the amount due were received except from a shareholder holding 1,000 share who did not pay the first and final call. Show the presentation of the share capital as per Schedule 3 of the Companies Act 2013. Can we do it? Now, tell me people, what is the first thing? Tell me the balance sheet. What is the main heading? Name of company. Then balance sheet as at 31st March so and so date. Correct? Then balance sheet. Then particulars, note number. Wherever you are showing a part of the balance sheet, compulsory extract word has to be written. Here are they given any financial year? No financial year. So let's put current year is 31st March 25 and previous year is 31st March 24. Any problem here? Now what is the main heading? What is the main heading? Equity or equities? Equity, EQUITY, and liabilities, LIABILITIES. Under that, how many sub classification we have? 4 sub classification, not 3. You're getting confused. 4 sub classification. Shareholders fund. Shareholders fund. Then share application money, pending allotment, non-current liability and current liability. Under equity liability has got how many children? 4 children. Equity and liability, I'm talking about. Equity and liability, how many children? 4 children. First children or children? Child. First child is how much? How much I'm asking? Ayyo, Rama. First child, name, shareholders fund. Second child name, share application money, pending allotment. Third, non-current liability. Fourth, current liabilities. So this is what shareholders funds. Now shareholders funds is having how many children? Three children. One is share capital. Second is reserves and surplus. Third, I did not tell you. I'll tell you. Huh? Yes, money received against share warrants. What it is, we'll discuss after the break. Correct? Now, share capital will be disclosed in note number 1. Note number 1. Reserves and surplus in note number 2. Am I loud and clear? So, from here, directly we're going where? Notes to accounts. In that, note number 1 is what? Share capital. Share capital. The formatting is very, very important. In that, what is the first thing that you will disclose? Information related to authorized capital. So what is heading? Authorized capital. Under that, 3 information needs to be disclosed. Quantity of shares, quantum of shares, class of shares, and face value. Face value is also called as nominal value. Authorized capital is also called as registered capital. Also called as nominal capital. Very good. But we'll use out of these 3 which capital only? Authorized capital is the most frequently used name. Now, how many shares is authorized? Say 50,000. So 50,000. Now tell what I have to write next. 50,000. Very good. Equity shares of rupees 10 each. Very good. Now in the rupees column. In the rupees column, what am I supposed to write? 5 lakh rupees. Put double line. Then issued and subscribed capital. Issued, subscribed, and paid up capital. In that, 20,000. Guys, out of 50,000 equity shares, how much are we offering to public? 20,000 equity shares. 20,000 equity shares. Can you write EQ income? No. Of rupees 10 each. How much? 2 lakh. Record in the inner column, not in the outer column. In the inner column, rupees 2 lakh. Guys, this is the total called up capital. In that, out of this 20,000 equity shares, this one gentleman who's holding 1,000 equity shares, he did not pay the first and final call. So 4 rupees per share he did not pay. How many shares? 1,000 share. That is called as what? Calls in arrear. So less calls in arrear. How much? 1,000 into 4. How much it is? 4,000 rupees. So what is the paid up capital? 1,96,000 rupees is the paid up capital. In the current question, guys, is there any issue of bonus shares? No. If it is there, then we have to disclose for how many years? 5 years. Is there any information about the shares issued for consideration other than cash? No. If it all there, how many years to be disclosed? 1 year. Have you seen the power of revision? The more you revise, how much effectively you're able to remember. If you do this as a CA student, I'm telling you, CA is not a big deal to clear. Understand the concept is very important. Multiple revisions is important. Multiple practices. If these 3 things religiously you do it, I'm telling you, CA is nothing in front of you. I'm telling you, nothing. Now look at the presentation. This was the presentation that you adopted in your 12th standard. CA foundation, authorized capital, issued capital, subscribed, fully paid, subscribed, not fully paid. Alternative presentation. Authorized how much? 50,000 equity shares of 10 each, 5 lakh. Issued, subscribed, and paid up capital, 20,000 equity shares of 10 each, less calls in arrear, 1,96,000. So this 1,96,000 is what will travel to your face of balance sheet. 1,96,000 share capital. Any problem? Online people, any problem?
No, sir. No, sir.
1,96,000. So 1,96,000 is what? Paid up capital. Always paid up capital only travel to your face of the balance sheet. If there is any forfeited value, forfeited share amount, that will get added here. Add forfeited share. So that also gets added here. Any problem? We have a question based on that also. We'll do it in the upcoming classes. Now, in this, do you have any doubts?
The subscriber fully paid up, subscriber not fully paid up.
Disclosure separately is not required. We have question based on that also in the ICA models. We'll work out that also. Don't worry. Sir, are we clear with the two concepts? We have discussed two things under shareholders funds. One is share capital. Second is reserves and surplus. Once we come back from the break, we have to now discuss what is the concept of share warrant. And then today itself, we'll discuss the concept of what is the difference between current and non-current liability. That is the target. Let's hope for the best. So let's take a quick break of 4 minutes. We'll come back and continue after the break. Thank you so much. Yes, people. Welcome back from break. So let's continue. Here's the next concept that we're going to discuss, which is a part of your shareholders funds classification, is money received against share warrants. So the question that arises is that what is the meaning of share warrant? Tell me, people, what is the meaning of share warrant? Sorry?
In the future, they may become
Very good. Potential shareholder is what she said. You said?
In the future, they may become shareholder.
Others? Okay. So now Abhi is saying that we'll issue shares in the future, but the company will take the money now. CA.Prathik Jain Limited, listed on the stock exchange, telling all the students, please come and take the shares of my company. Not now, in future, but you make the payment today. 5 years later, I'll give you the shares of my company, but you have to make payment today. And I'm giving you a promise in form of share warrant. How many of you are willing to buy the shares of my company? Okay. Kaushik is saying, Subi, next. Listen to me offer very carefully. I'm telling you, after 5 years, I'll give my shares of the company. But you have to pay amount today. And as a acknowledgement, I'm giving you a contract, a promise where it is written in a contract called a share warrant. Means what? I'm going to give shares in future, but I'm going to get money from you now. How many of you are willing to buy? How many of you are willing to buy the shares of my company? If you're saying I will buy, on what basis? Just because Pratik Sir will buy, yeah? On what basis, you tell me?
Price will increase over a period.
Okay, he's telling price will increase over a period of time. That is why I'm buying the shares of your company. I said you, my company is listed on the stock exchange, which means the money what you're paying now to me, if you directly buy the shares from the stock exchange, you will become the member of my company already. Once you become a member of the company, the advantage what you get is you will get dividend profits from my company right from the day you invest. You'll get right to vote. Are you able to follow? So what he's saying, Kaushik is saying that, sir, I want to invest in your company. Why? Because if I pay that money today, 5 years later when I get that shares, the share value will be increased, he's telling. I'm telling that logic is wrong. Why? Because even if Kaushik is buying the shares of my company, not from me in future 5 years later, my shares are listed on stock exchange. He can buy that shares in the stock exchange. No. If he's so confident that the share price will increase after 5 years, you can buy from the share market directly, from the other public people. If you buy like that, what is the advantage? The moment you buy the shares today of my company from the stock exchange, you become the member of my company. Which means that from today onwards, whatever dividend I pay, you are eligible to get the dividend. From today, you will get right to vote in my company. But the proposal what I gave you, where I will give shares after 5 years, but I take money now. 5 years I'm enjoying your money, and what are you getting in return? Nothing. What are you getting, boss? 5 years I'm enjoying your money. Am I paying interest for you for that 5 years? No. Am I going to give you dividend? No, because you're not a member. Dividend is given to whom? Only the shareholder. You are not the shareholder because you are a warrant holder. So you're not getting dividend. No interest, no dividend, no voting right. Then what is attracting you to get the warrant of my company? You can get the shares still on the stock exchange. What confirm allotment? She's telling, sir, warrant to get the confirm allotment. Means 5 years later, confirm allotment I'll get. I'm telling you, my shares are listed in the stock exchange.
Now or after 5 years?
Now it is listed already. Anyways, you can get the shares from the stock market. If you're so particular that 5 years later, your shares price will increase, then you can anyways buy from the stock market. You can become the member of the company. You can enjoy the dividend. You can enjoy the voting right. And you can still enjoy the appreciation. Why is it that you have to get stuck into warrant? Guys, you have to understand the feeling. Now, a company or a warrant, that warrant should be attractive to me. If I'm buying the warrant of any company, I should have some benefit into it. That benefit should be a win-win benefit. Means what? The company also should benefit. I also should benefit. Then, if I do any deal, the deal is a sensible deal. Are you able to follow? In this share warrant, I'm telling you, I will issue the shares after 5 years, but I am enjoying the money now for 5 years. So it is win for me. What is win for you?
So share warrant.
After 5 years, the market.
Now, what is the meaning of predetermined rate? This is the catch here. This is the catch here. Now, how will you attract the public to invest in your share warrant? I should give them at a price which is lower than the current market price. Let's suppose KVA's current market price. Kalpavriksha Academy Limited's share price in the stock market now is 2,000 rupees. After 5 years, you're speculating that it will become 3,500. So how much increase is there? 1,500. Correct? If I give this shares at same 2,000 rupees, then you will not buy it from me, no? You'll buy it from the share market. Because if you buy from me, you're getting only warrant. Warrant means you're not a member. If you're not a member, no dividend, no voting right. But same 2,000 rupees, if you buy from the stock market, you become a member, you get dividend, you get voting right. So now I should give at some price which will attract you. So I'm telling you, this share which is worth 2,000 now, you have to pay me 1,500 rupees. Example wise, I'm taking. Today, the share which is worth 2,000 rupees in the share market, I am giving you this at a predetermined price of 1,500. So 1,500 shares into 100 shares. How much money? So I will take 1,50,000 rupees from you. I am giving you 100 shares of 1,500, whose market value is how much? 2,000 per share. How much it is? Totally 2 lakh rupees. So 2 lakh worth of share I'm giving at 1,50,000 rupees. Now can I say this is an attractive point to attract the public to buy the share warrant? So what is a share warrant? A share warrant is a contractual document. It is an instrument. It is an agreement. It is a contract. This document is issued by whom? This is issued by a company. This is issued by a company, which gives the warrant holder. Whoever is applying for the share warrant, he is called as a warrant holder. The person who pays the money is called as a warrant holder, which gives the warrant holder the right or the option. It is not compulsory. It is an option to purchase a company share at a specified predetermined price. In our example, what is the predetermined price? 1,500 on a predetermined time period. I'll give you the date also in the warrant. Which date? Give me the warrant and take the shares of the company. In the contractual agreement, I'll tell you the date also. 5 years from now, which means this is 2005, 25 now, 26, 27, 28, 29, 30, which means 26 Feb 2030. Please come to me, surrender the warrant and take the share certificate. On that day onwards, I become a member officially. Correct? So what is a share warrant? I'm giving the promise to the shareholder that after a stipulated period, I will make you the shareholder of my company. But the big question is that why should the person come and take your warrant? Because when you're giving the money to the company, the warrant holder does not become the member. Since he is not a member, he does not have voting right and he cannot get the dividend of the company. So why the hell will he pay the money to the company? What is he benefiting? The company is benefiting because company got 1.5 lakh rupees. But as a warrant holder, what is my benefit? So I have to give some benefit so that the person will come and be eager to buy the warrant of my company. So what is the attraction? Price point is the attraction. So I'm trying to give this shares at what price? 1,500 rupees. Whereas the share in the market is worth how much? 2,000 rupees. So how much is the profit per share to the warrant holder? 500 rupees is the profit. He's getting a discount of 500 rupees. So this is an attractive point at this stage. That is why any person will be interested in the warrant of the company. Otherwise, nobody will be interested. Then there's no concept of warrant then. So to make this warrant a practical point, this kind of concept was been developed that the shares will be issued at the predetermined discounted price. Any problem here?
This 500 will be profit or we need to minus the.
Very simple. This 500 rupees is something which the company will bear. Now the accounting treatment of this is not discussed here. In short, you are paying how much now? 1,500 per share. How many shares? 100 shares. So total how much? 1.5 lakh rupees. Correct. So 2 lakh worth of share I'm getting at 1.5 lakh rupees. And you are buying this warrant when you believe that this 2,000 rupees worth of share in future could be becoming 3,500. When you see a growth pattern in the share or in that company, only you will try to invest. When you're not sure about the growth pattern of the company, then you will not buy this warrant at all. So when will I buy a warrant of any company? When I feel that this company is going to grow in the share market, stock market, then only I'll be interested in that warrant. Because after 5 years, confirm I'm getting one share. Plus, I'm getting a discounted price. So in future, if it is 3,500, let's suppose, then what is the profit that I made per share? 2,000 rupees is the profit that I made per share upon selling the shares. Am I loud and clear? So the warrant holder during the vesting period. So now the 5-year period is there. No, the warrant is being given here. The warrant is converted to share here. Correct? The warrant is given when 26th of February 2025. When is the warrant converted into share? 26th February 2030. So what is the gap here? 5 years. In this 5 year, this 5 year is called as vesting period. In this 5 year, the warrant holder will have no rights of a member. Means what? He will have no right to dividend. He will have no right to dividend. He will have no right to vote. He will have no right to any interest. The only advantage what he's got is he's getting the share at a predetermined price, which is very, very, very less than the price which is prevailing in the stock market. Am I loud and clear? This is called as share warrant. Now the question is, if I issue the share warrant, what will be the journal entry? Bank account debit. Bank account debit to share warrant. Bank account debit to share warrant. How much? 1,50,000. 1,50,000. How, sir? 1,500 rupees per share into 100 share. So 1,50,000 you got in your bank account. Now my question goes to all of you. What is the classification of share warrant? Can I put this under current liability or non-current liability? Is this a liability? Is this a liability? No. Hence, I gave you one video today morning to watch, in which I've discussed the concept of contingent liability, liability, and provision. So I told you to watch it. Please tell me, what is the meaning of liability? If I have to call an item as liability, what are the 3 conditions it has to satisfy? No. One, it has to have a present obligation. What is meaning of present obligation? Present obligation means what? Today, when I'm recording this value, there should be a condition that I have to pay this money confirm in future, which means 100% have to pay in future. That is called as present obligation. Correct? If I go to departmental store, there is one chocolate. I took my son along with me. He took that Dairy Milk chocolate. He broke the wrapper. Do I have the obligation to pay for that or not? Because what they say, if you tore that wrapper, you have to pay the money. So is my present obligation arising there or not? Yes. Second, what is second thing? What is the second thing? No, before that. Before that. One is present obligation. Second, what is second? Second point. Fast.
Thank you.
Huh?
Thank you.
No. Tell fast.
Sir, that your
Present obligation. Second. There's confirmed certainty to pay the money. There's certainty to pay the money. There's a confirmed outflow that is going to happen. Second is what? Outflow of economic resources. What is mean of economic resources? If I pay in form of cash, check, draft, asset, I can pay in any form, no? I can pay in form of asset also. I can give my creditor, instead of cash, I can give my laptop. So that is called as economic resources of the company. So what is the economic resource of the company? The assets are the economic resource. So means what? The moment my son tore that dairy milk wrapper, confirm I have to pay the money. The outflow is confirm. Present obligation means what? It is my responsibility. I have to pay. Second point says what? It has to pay in a form of certain thing, in form of cash or bank. Outflow of economic resources confirm. Third is what? Can you measure? What is the third point? Exact amount could be measured. The exact amount could be measured. Exact amount of outflow could be measured. Exact amount of outflow is determined. If these three conditions are satisfied together, we call this as a liability. We call this as a liability. Any problem? Now, in the case of share warrant, is this share warrant, satisfying all the three conditions? Exact amount of the outflow or exact amount of this transaction, can I say it is calculated? You know it. What is the exact amount of this transaction? 1,50,000 rupees. This condition is satisfied. What is the meaning of present obligation? Present obligation means what? The liability is existing, which arises from an event. So is this my liability? Am I going to repay this money back? Present obligation is not there. Is there any outflow of the money going to happen here? This is a transaction where we're recording inflow. So is this satisfying your liability clause? So I cannot classify this under liability because I'm not going to repay back. You will tell, sir, in future I have to repay back. In future, I'm not going to repay back. I'm going to convert this into shares. Future is a different transaction. When it happens, that time we'll see. But today, when we're recording this transaction, today this is a share warrant. Is this of a nature of a liability? No. If I take example of a creditor, creditor is my liability because all the three conditions are satisfied. Present obligation because I made a credit purchase. So I'm enjoying the goods. So I'm obliged to pay the money. I'm going to confirmly pay the money after 2-3 months. The outflow is confirmed. And what amount I'm going to pay exactly to the creditor, I know. All the three conditions satisfied. Hence, creditor is a liability. Correct? No? But share warrant, are you going to repay now? Immediately now in next few months. Share warrant condition is what? In future, I'm going to give the shares. Now, if the shareholder does not opt for the option, please understand, this is an option to the shareholder. Sorry, this is an option to the warrant holder. On the 5th year, if the person wants, he will give the warrant and get the shares. Otherwise, he can give the warrant and get his money back. But it's 50-50. But now here, when I'm recording this 150, there is no surety that confirm I'll repay this money back. So will I call this as a liability? No. I don't understand. I'm trying to make you understand that what is the classification of share warrant. Why I can't call this as liability, I'm making you understand. Liability means what? I have to pay this money in future. And today I know that how much money I'm going to pay in future and why I'm going to pay in future. I'm very clear about it. Share warrant, there is no necessity that I'm repaying in future. This could be converted into shares. So this is a liability, can I say? Is this a liability? The answer is no. Okay, in that, if this is not a liability, then where will we classify? Can I classify this under share capital? The answer is no. Because share capital means what? It is shareholders' money. Shareholders' money. Share capital means what? The money that is collected against the capital. Is warrant a capital? No. It is in form of, it is what stage? It is a raw stage. It is a raw stage. That is if I create a, sorry, if I manufacture a cake, so I'm buying all the ingredients, no? So ingredients is what at raw stage. So share warrant is like that ingredient stage, raw stage, egg stage. Are you able to follow? So can I call this as, can I put this under capital? The answer is no. And hence, there is a need for the Companies Act to create a separate category because this was neither falling under the category of the share. This was not falling under the category of liability. And nor it was forming under form, this is not, sorry, this is also not forming a part of your share capital. But share warrant, somewhere you're getting a feeling of a member, future prospect member. Hence, we decided to include them under shareholders fund, giving them a separate category to differentiate from the share capital. Share capital means what? Share capital means it is the members of the company who have the voting rights, who have the right to receive the dividend. I cannot put warrant in this category. Hence, we came out with a different category called as money received against share warrant. So why are we classifying this under shareholders funds? Why? Because ultimately this in future is going to get converted into member. It's a prospective member. And hence they said that we can classify this under shareholders funds, but we'll put a separate category called as share warrant. Money received against share warrant. Am I loud and clear? Yes, Purvi. Present obligation we have to pay in future when if the person does not opt to convert his option into shares, then you have to pay. If he is opting to convert into shares, are you going to pay him the money? So let's agree. If your perspective present obligation is there, let's agree. Is there any outflow of economic resources? No. See, outflow of economic resources means what? Creditor, I'm going to settle in form of cash, in form of check. So there's an outflow of money going to happen in form of economic resources. So economic resource means what I'm paying in form of any kind of assets. That could be cash, check, or any kind of assets. Here we're not going to pay the assets. We're going to give the shares to it, which is a liability partner. Hello, shares are how assets of the company. If you're investing in any company, then for you as an investor, it is an asset. But I'm talking from the company viewpoint. So share capital is coming on the liability side, no boss. How can you call this as a liability? Liability means what I have to pay money in future. Am I going to pay this money in future? Tell me. Am I going to repay this money in future? No. And hence, what is the meaning of liability? That is what I was making you understand. Had you watched that video properly, you would have not asked this question. In this class, I very clearly explained what is the difference between provision liability and contingent liability. Provision means what here? Liability means it is a present obligation. That is, liability is existing. It means if the moment my son is tearing that wrapper of dairy milk, I am obliged to pay the money. Second, this is arising because of an event. The moment my son tore that wrapper, that is an event. Because of that event, it is my responsibility to pay the money. Am I right? For example, let's say you're walking from this corridor. There's a flower vase there. The moment you push the flower vase and it fell down, it broke. Can I say you have the obligation to get me the new flower vase, or you have to pay the money for it? Correct. Second, the moment it is a present obligation, there should be a certainty to pay the money. Means what? I have to pay that money from my pocket. The clarity should be there. The outflow should happen. The clarity of the outflow should be there. Means what? Either I'll pay in form of cash or through check or through any other form. That should be clear. And third, what amount I'm going to pay, that exact amount also I should be knowing it. If all these three conditions satisfy, it is a liability. Creditor case, what I said, the moment you buy the goods and you sold the goods, the moment you buy the goods, you take the delivery, you take the ownership. The opposite person said what, vendor said what, you have to pay the money. So present obligation is arise. The moment you take the delivery of the goods, the delivery is an event which triggers your present obligation. Second, you have committed to him that I'll make you the payment after 3 months. So there is a certainty in the outflow of the money. And third, what amount you're going to pay to the creditor is mentioned very clearly in the bill. So exact amount to pay also is known to me. If all these three conditions are satisfied, I call this as liability. You take any liability, creditor, bills payable, outstanding wages, outstanding salaries. All these are my liabilities. But share warrant is what? I got the money. First of all, it is money coming in, not going out. So outflow itself is not there. So this cannot satisfy the condition of being called as a liability. And hence there was a need for us to classify this as a separate classification, and we put under shareholders funds. But why not under share capital? Because warrants are given to the warrant holder, and warrant holder are not members with those two rights. Right to dividend and right to vote is not there to the warrant holder. And hence we had to differentiate those people from the shareholders, that is members. Hence the separate category of money received against share warrant was created. Yes, Purvi. Loan means what? If I'm getting money, I have to pay back in future. Let's suppose, Purvi, I have given you share warrant. You are the warrant holder. Warrant means what? Tomorrow you will come and give that warrant to me in hand, telling that, sir, 5 years ago you said that you'll give me the shares. So please take the warrant certificate, give me the shares. So when I give you the shares, where the hell is the outflow of the economic resources? Am I paying you cash? Am I paying with the bank? Am I paying in assets? No. I'm giving the shares of my company, which is on the liability side. When I'm saying outflow of economic resource from the asset side, am I taking anything and giving it to you? No. I'm making you the member of my company. I'm converting from a warrant holder to a member holder. My warrant is getting converted to capital. Hence, that is not outflow of economic resource.
So one liability to another liability.
Exactly.
Not-
So it's not liability. Equity is not a liability. You're just trying to convert one form of capital to another form. That's it.
But liability means the outflow will be in the form of asset. Right?
Yes. Yes.
But this is not asset, we are in the form of capital.
Correct. No. If you're transferring reserve from one reserve to another reserve, will you call that as a liability? I'm transferring the amount from one reserve account to another reserve account. I'm transferring money from one pocket to another pocket. Will I call it as a liability? No. So this is a principal understanding that you have to have. Yes, Purvi, what is your further doubt? You digest aram se, no problem. But you can take digest and digest, no issues. Think. You have the habit of this. Think aram se. Come back to me again. Specifically with your doubt. Second point, yes.
So you're telling when the payback is in money, it's a loan. If the payback is in share, then
No, see, when I'm going to repay now in future after 5 years, if the person is coming and asking back the money, I will know about that only in that point of time. So the moment the person gives the warrant and asks me to pay the money, then from warrant I will convert it to current liability. I'll transfer to current liability. So if he after 5 years, that is on 26th of February 2030, if the person comes and gives me the warrant and says, "Get lost, your company is dummy company, useless company. I thought the shares will go somewhere. No, donkey fellow, the shares price is sitting somewhere else. I don't want your shares. Give my money back." In that case, I'll move that warrant from the share warrant account to the current liability account. If the share is doing good, if I'm still interested to buy the share of the company, I'll give the warrant and buy the shares. In that case, this money is being moving from warrant account to the share capital account. Yes. No, when the company is winding up, you have to pay asking. So at the time of winding up, is the person warrant holder still or the shareholder? Warrant holder means you have to pay the money back. So now let's suppose 5 years before itself, that is third year itself, the company is winding up. In that case, the money has to be repaid back to the warrant holder. So after I pay money to external liability holders, I have to first pay to the warrant holder, then money has to be paid to the shareholders. So in that case, warrant holder money from this will be classified under current liabilities. Correct. No, the benefit is that you're getting the shares at discounted price. When see, you're telling that after 3 years of the company winds up, what is the benefit? That is the judgment you're having. No. Today, when I'm giving the shares, you have to make a judgment. How will you make the judgment? You will analyze my financial statement. You will go through all the points and then make a decision whether this company will wind up in 5 years or not. You are investing in my company when you have a clarity that this company is going to run for a long period. The company will not close. When you're convinced with that, only then you will invest in my company. Otherwise, why will you invest in my company? So when you're investing in my company as a warrant holder, you have to do your own research whether this company is going to grow or not. If it is not going to grow, don't invest. If it is going to grow, invest. Sometime you made all the calculations. The company was excellent. Everything is fine. But 2 years later, the situation in the market is like that. The company had become bankrupt. What they will do? Nothing can be done. So that is the loss. That is the risk that you have to take. So let's suppose I'm putting my money in multiple stocks, share of the stock market. Can I say that in every company I'll make profits? Some company I make profit, some company I make loss. That is a judgment that we have. No? So sometimes judgment goes right, sometimes judgment goes wrong. That is the risk that we are playing with, no boss. Am I loud and clear? Now, now that you have to wait. Now Puri was asking on 26th Feb 2030. The warrant holder is telling, I don't want your shares, give me the money back. So now where will you put that money? That is until you pay the money, this amount you will classify from this category to which category? 100% is go to current liability. But where in the current liability we'll discuss in the next class. Am I loud and clear? No, wait. No, we have discussed. I'm not saying anything. I'm playing Purvi's question. I'm just repeating it. I'm telling you, wait for next class to get a clarity.
So when we know about it, then only we'll clarify.
Yes. Now, what is share application money pending allotment?
We received the money for application, but we didn't allot the shares. In the next financial year, we are going to allot
Correct.
the shares. So that right, in 31(3) balance sheet, will show us share.
Perfect. Now what happens is, here, 25th of March, company has, opened the platform for subscription of the shares. Which means what? Let's suppose, have you all come across this term called as IPO? Initial public offering. This is a stage where the company is raising the money from the general public. So they will send you prospectus. Prospectus is basically what? An invitation, telling that this is my company. I've incorporated my company on so and so year. I'm doing so and so business. My business is doing so well as of now. In future, I'm trying to expand in multiple places. For that, I need money, and for that money, I'm coming to you. So in the prospectus, they'll give all the information which is required to decide whether you want to invest in that company or not. Along with that, they'll send you one application form, telling that if you read the prospectus, if you like my company, if you like the growth of our company, you can fill this application form and become the member of the company by investing so and so amount. So now what happens? You are liking it. Now, 25th of March, they are opening the application window. Application window is open generally for 3 days. 25th of March, 26th of March, 27th of March in our example. 3 days it is open, any 3 days. I am telling 25, 26, 27. So in these 3 days, you can fill the application form. All over India, multiple people will fill the application form on the online platform in the respective DMAT account. Am I clear? Now what happens is that 27th March, end of the day, the application is closed. The company will take additional 3 or 4 days to do the allotment of the shares. It will take 3, 4, 5 days to do allotment of shares. So let's say from here the company is taking 5 days to allot the shares. So when will the allotment happen from here? 28, 29, 31 to 2nd April, basically the allotment will happen. 2nd April, the allotment will happen. Now, in the CA Foundation, I told you, there are 3 types of subscription. One is under subscription. One is at par subscription. One is over subscription. 10,000 shares I have issued to public, I have offered to public. In that, 9,900 shares have been applied by the public. This is called as under subscription. This is one case. Second case is what? I offer 10,000 shares to public. Full 10,000 shares exactly got subscribed. That is called as par subscription, at par subscription. 10,000 shares I offered to public, but I got application for 15,000 shares because there's no control on application. No, nook and corner of the country people are applying. So anybody can apply from anywhere. So like that, when I saw 15,000 people applied my shares. So this is called as over subscription. Now I'm talking about at par subscription. You offer 10,000 shares, 10,000 shares applied, which means what? Confirm you're going to allot the shares. But when are you going to allot the share? 2nd April, which is typically the next financial year. Do you agree with me? It is the next financial year. When have you received the money? 25th of March, 26th of March, 27th of March, you received the money. So on all these 3 dates, 25, 26 and 27, when you receive the money, what is your journal entry? Very good. Bank account debit to equity share application account. How much? Let's suppose 1 lakh rupees and 1 lakh rupees. So this will go to your bank account on the asset side. Do you agree with me? The question that arises is that to equity share application will go where? That too, when you are confirmly going to allot, where will you put this? Again, you'll ask 3 questions. Is there any present obligation to pay the money? The present obligation to pay is there? No, because I'm going to allot the shares to them. I'm not going to refund the money. Second, is there any outflow of the economic resources? The answer is no, because I'm not going to repay the money back. Do I know the amount very clearly? The amount is known to me? Yes. These 2 conditions are not satisfying, and then this is not a liability. Share application money pending allotment. Pending allotment means what? Money received. I'm going to allot, but not yet allotted. As on 31st of March. As on 31st of March, money received, but not allotted. Am I going to refund the money? No. I'm going to allot the shares. When? Next year. So now this money what is received, where should I classify as on 31st of March? I cannot put under liabilities, neither current liability nor non-current liability. It is neither current liability nor non-current liability because the condition of the liability is not satisfying. Can I put under shareholders funds? No, because at this stage, since I have not done the allotment, this person is not the member, neither the warrant holder. He has got no feature of being a member. He's somewhere in middle. He's not yet a member yet. So I cannot put under shareholders funds. Hence, it was a need for the Schedule 3 to come out with a new category called as share application money pending allotment. So if you see shareholders funds is one category, liability is another category. In both of these category, share application money pending allotment is not fitting in it. Hence, it is a separate category to be highlighted. Am I loud and clear?
We committed shareholders funds.
Now the question is, sir, why are we not clubbing in the shareholders funds? At this stage, the person who's paid the money, does he have any feature and nature of being called as a member? Can I put in the share capital? Why will I put in a share capital? Because I'm not allotted. When would I put something? When do I say something is capital? Only when the allotment is completed. Guys, you forgot the second entry. What is the second entry? When the share is allotted, what is second entry? Equity share application to share capital. When? On 2nd of April. On 2nd of April. In between, financial year is coming. So this equity share application is temporary liability. But can I put in the liability? Because no, because it is not a liability. The provisions of liability is not matching. Neither can I put under shareholders funds because this is not an owner's money. So we had to create a separate unique category called as share application money pending allotment.
A, B, C, D. Money received against share warrant also, they are not members.
Money received against share warrant is a prospective member.
Even he is a prospective member because next year.
Correct. Who has given this classification? Now listen to very carefully. What did I say? Schedule 3 is a format given by Companies Act. Definitely we should understand the emotion of it. Feeling, concept, logic, we have to understand. But I said you what? At so many places you can challenge the format. Correct? No? Now same question, what Kritin is asking, even we can ask, sir, share warrant மட்டும் நீங்க வந்து shareholders fund ல போட்டுருக்கீங்க. என்ன reason? He's a prospective member. அப்ப நான் இவனும் prospective member தானே? Because he also going to get shares after two days. Warrant holder is getting amount after 5 years. I mean shares after 5 years. This bugger is going to get after 2 days. We can debate. I'm telling you as a CA, I can debate on multiple places. But whom will you go and debate? Schedule 3. You know where Schedule 3 lives? No, sir, I will go and debate with Companies Act. Sir. You know where Company Act lives? No, sir, I will go and debate with MCA. You know where MCA lives? Hello? So what I'm trying to tell is that whenever we are doing the format-based learning, no, you cannot question it in a logical manner. Though logic will understand. Wherever possible, we'll discuss the logic. But there are certain places we have to digest it. We have to just accept it. I know what your emotion is, what your feeling is. For that, I have a lot of concerns. But when format is given, we cannot bypass the format because we are coming under MCA. We have to follow the rules and regulations. Correct? The moment you go inside your house, can you follow your own rules and regulations? Can you bring your 10 friends and do galata in your house? No, because you're governed by the rules and regulations of your parents. But you can tell, no, I am your single son. That right also will not give me. You can argue. But will you win your argument? No. Correct? Correct? No. So when you're under something, we are under control of somebody, you cannot challenge the legality. Yes, you cannot challenge the law. You cannot challenge the rules. They are right in their own perspective. You are right in their own perspective. Your question is that I'm the only son. I want to enjoy my life. What is wrong? I'm bringing my 10 friends, drinks, cigarette, everything I'm doing. What is wrong? You have right, everything to do. You do it. You are right from your perspective. But from the perspective of the law, which is set by your parents, not allowed. Not allowed means not allowed. Once you cross 21, 22, you do whatever you want to do outside the house, but not in the house. If you're lucky, you'll get that statement. Else, that also not possible. Correct? No? Same way, this is that format. 90%, 95%, 99% will try to understand the logic. But some places, your logic will get dashing car. You know what is dashing car? Doom, doom, dishum. Correct? No? There we cannot question anything. Format, Govinda, oh Govinda. Am I loud and clear? You'll put this in a separate category called as share application money pending allotment category. No problem. Now, in case of oversubscription, what happens? 10,000 shares of 10 rupee means 1 lakh you're going to allot. Remaining 5,000 shares of 10 rupee, 50,000, what are you supposed to do? Refund. This is called as refund. Correct? So now on 27th March, 25, 26, 27 March, how much money you got in your bank account now? 1 lakh 50,000 rupees. Bank account debit to equity share application 1 lakh 50,000 rupees. Correct? When are you going to allot? On 2nd April. How many shares you're going to allot? Only 1 lakh shares you're going to allot. in the capital account. Remaining amount, what are you going to do? 50,000 rupees you're going to refund in the bank account. Correct? Between these two pay period, what is happening? Year end is coming. Year end is coming. 31st March, year end is coming. 30, that is 25, 26, 27, you got the money. 31st is year end. And on 2nd April, you're doing allotment. How much money have you received totally now? 1,50,000 rupees you have received. How much are you going to issue a share? 1 lakh. How much are you going to refund? 50,000. Now, my question goes to all of you. This 1,50,000 rupees, which is there in equity share application account, where will you classify?
1 lakh in equity share.
Think and respond. Think and respond.
1 lakh will go to share application money pending allotment.
Very good.
Will go to current liability.
Okay. Offline, I got the answer. Online, now you tell me. Sir, in this 1 lakh, I'm going to confirm allot. Pakka, am I going to allot on 2nd April? Yes. Then this will go to equity share application money pending allotment. I'm going to put under pending allotment category. Remaining 50,000, I have to repay, I have to refund. So this goes to your current liability. Where in the current liability? Other current liability. What is current liability? Discuss in next class. Means what? I have to pay the money back in next few days. What is current liability? I have to pay the money next 12 months of the balance sheet date. I'll be discussing in detail in the next class. But I will classify this as 50,000 as current liability. Any problem? Online people, any problem?
No, sir.
First scenario I discussed about the at par subscription. Do you agree with me? At par subscription or under subscription. So you, whatever share application money you receive, you're confirm going to allot. So in case of at par subscription and under subscription, whatever money you're going to receive, you're going to allot. If in between the application receive money and allotment date, if there is a year end, if there's an year end coming between the application money received date and the allotment date, this will go where share application money pending allotment. This is first concept. Second concept I discussed about the over subscription, where that extra 50,000 rupees, what am I going to do? I'm going to refund. I'm going to refund. So this goes to your current liability. Clear? Now I'm talking about another scenario in the over subscription where you are doing installment option. So what happened? 10,000 shares you offered to public. How many people have applied? How much shares is applied? 15,000 shares has been applied. How much applied? 15,000 shares applied. How much money you are wanting at the application stage? Only 2 rupee. 2 rupee at the application stage you want. So now, what will be the entry for this stage? Bank account debit, 15,000 share into 2 rupee. How much it is? Like 30,000. What? 1 lakh you're going. To what? Equity share application. How much? 30,000 rupees. This is happening when? On 25, 26 and 27. In between, what is happening? 31st March year end is coming. Any problem?
No, sir.
After that, on 2nd of April, you're going to do the allotment. While doing the allotment, you have reversed the equity share application account debit. How much? 30,000. To equity share capital, how much will you allot? 10,000 into 2, which is how much? 20,000. Remaining 10,000, you have decided not to refund, but to adjust against your allotment and the call stage. So you will transfer this to 2 calls in advance. 2 calls in advance. How much? 10,000 rupees. Correct? So my question goes to all of you. On 31st March, this 30,000 rupees, how will you classify and where will you classify?
20,000 share application money pending allotment.
Very good.
10,000.
Sir, this 20,000 rupees will go to my share application money pending allotment. Why? Because for this 20,000 share, confirm I'm going to transfer to capital account. Confirm I'm going to give the shares. But for the remaining 10,000 rupees, I'm not going to refund, but I'm adjusting against the future allotment or call money. So until I make the allotment call, until I make the first call, this is a temporary liability. Hence, it goes to your other current liability. Other current liability. Why this is a temporary liability? The person who is paying excess money, if he says, give me money back, in that case, you are under obligation to pay the money back. And hence, this is your other current liability. So I discussed how many scenarios? 3 scenarios. The first scenario was what? At par subscription or under subscription. In that, whatever money you receive on the balance sheet date, you will classify under share application money pending allotment because you're going to confirm allotting the shares after 2 days. Over subscription, 2 scenarios. One, if you're going to refund they have to take it to other current liability. Second, if you're even going to adjust as a calls in advance in the future transaction, you will still take that extra money, advance money, as your other current liability. Other current liability. In this, do you have any doubts now? Please tell me. If you have any doubts in this, let me know. Online people, are you all there? All the sleeping beauties and beautas, please wake up and tell me if you have any doubts.
No, sir. No, sir.
Now that is the next point. Fourth case. 3 cases we discussed. Fourth case, under subscription and minimum subscription criteria not met. Minimum subscription is 90% of the application money, which is set by SEBI. SEBI said that 90% of the application money minimum you have to receive. Now listen to this question very carefully. 10,000 shares you offer to public. People have subscribed full 10,000 shares. No.
9,000.
People have subscribed for 8,000 shares. So bank account debit to equity share application 8,000 into 10. So how much is it? 80,000. Whereas what is your target? 10,000 shares you offer to public. 10,000 shares you offer to public into 10 rupee per share. How much have you offered? 1 lakh. 1 lakh is my total money to be received at the application stage, because this is lump sum amount. Into 90% is how much? 90,000 money I should have received in the bank. Did you receive 90,000? No. Did you satisfy the minimum subscription criteria? No. And hence, can I go ahead with the allotment? The answer is no, no, no. If the minimum subscription criteria is not met, you cannot go ahead with your allotment. So I have to refund. So now on 25, 26, 27, you got to know how much is the money. And year end is coming. And you have to decide about the allotment or no allotment when? On 2nd of April. So until that 31st March is there, this money received 80,000 rupees. Where should I classify it? Under other current liability, because still I have to repay this money back. I have to classify this under current liability. Where under current liability, I'll discuss when I discuss the current liability part. Where under current liability, I'm meant to discuss. I'm just telling you, since I have to make the payment within 12 months or within 2 days of the balance sheet date, I will classify this as current liability. What is current liability? What is the classification of current liability? What is non-current liability? What is the classification of non-current liability? I'll be discussing next class. My today's discussion only discussion about these point pertaining to the allotment of the shares. In this, do you have any doubts? So how many scenarios we have discussed? 4 scenarios we have discussed. In this, if you have any doubts, please ask. The problem is, once again, the thing is, all this has been discussed extensively where, already in your 12th standard and CA foundation. Those who came from a CA foundation last time, I made you go through this 12 CPC classes. There we discussed all this point. This is there in the TS Grewal book properly with multiple examples. That is why I keep on insisting all of you that touch your basics. Without basics, interview cannot survive. Yes, sorry, your question. That is there subject to terms and conditions. That is something you'll study in law. That how does it work? In accounting, we treat that as a liability. The question what is asking is that in case of oversubscription, the excess money you will adjust to, that is called calls in advance. Are we supposed to really refund it back? No, there's a rules and regulation attached to it. You'll follow as per that. But accounting wise, we don't go into that depth. We classify this as temporary liability and we'll put in current liability and leave it. Law wise, what are we supposed to do? If the person asks, should we pay the money or not? As per your article of association, you'll make a decision. But as per accounting, that calls in advance as a liability and we take it to other current liability. That is a simple deal in accounting. We don't complicate law here much. We keep it very simple from the accounting perspective. In this, if you have any doubts, please ask me. So today we have discussed on shareholders funds and share application money pending allotment. Maybe what I'll do is these 4 questions what I discussed, I can incorporate in form of examples. I'll give examples and the conclusion, all the 4 questions I'll give it to you. So whenever you go through this, you can get that 4 points immediately in your mind. Now orally we have discussed, no, I didn't put it because this is an old concept. They will not test also here. But since if you feel that no sir, if you put this as an example in the textbook, it'll be easy for us to go through when we revise. Then I can put and give it to you. So those 4 questions I'll redraft properly and incorporate in your scanner and give it to you. Any problem now?
In the example you gave, the application window is closed and we are yet to do the allotment.
In the example that I gave, the application window is closed 25, 26, 27. Year end is coming. The allotment is pending. You're right.
For example, if the shares only on 29th.
On 29th March, you issued the shares totally. Means allotment is done.
We have issued the shares, we are receiving the application money. The
Application money is
application
three.
Application window is closing on.
Instead of 27th March.
Next financial year.
Okay.
In the next financial year, the application is closed.
Okay. Now, the question what has been asked is that, sir, the application window got open only on 29th of March. 29, 30, 31. 29, 30, 31. So 3 days application window is open. First of all, this scenario will not come in even real life because the person is opening the window, he will calculate all this and only open. First of all, practically you'll never get to see this. But since you're asking, I'll tell you. Here what will happen? Whatever money you've received in your bank account till, sorry, this is not 29, 30. Let's make it 30, 31 and 1. Let's say your application window is opening on 30 March. So 30 you will receive money, 31 also you will receive money, 1 April also you will receive money. 30 and 31 is forming part of one financial year, whereas 1 is forming part of next financial year. So on 31st March, what are you supposed to do? Whatever money is received on these 2 days, these two money what you received only will be classified as per what we discussed in these 4 scenarios. So typically 31st March, you will pass one entry for 30. Guys, please understand, journal entry we pass in a chronological order on day-to-day basis. So you would have passed the receipt entry on 30 March. You would have passed the entry on 31 March. So both of these put together, the money received is there. No, you'll give the same treatment what we discussed in those 4 scenarios.
So on those 2 days.
So whatever these two days money is received, accordingly you will classify under either current liability or, see, you cannot put this under share application money pending allotment. Tell me why.
Allotment is not done.
Because after receiving the money on first only, only then I'll get to know whether I'll do allotment or not. In this scenario, I'll put every money received on 30 and 31 under current liability only. 31st March, where you got 2 amount, 30 ka amount you got, 31 ka amount you got. Is there any assurity that you will allot the shares? No. So I cannot put the money that is received on 30 and 31. These 2 days, what money I've received? No, I cannot put under share application money pending allotment because I have not yet decided to allot. And hence, this will be under current liability only. It will be under current liability only. After that, 1st April money you receive, then you check the minimum subscription criteria. Then when you decide, then you'll go ahead with the allotment. So at this stage, for this question, what Abhi is asking, here, the whatever money is listed on 30 and 31 is going to be your current liability, current liability, current liability. Assuming that the minimum subscription is not met and we have to refund, we'll take a prudence concept into picture, and that is how we do the accounting. Any other question? Good question, by the way. Others? This is called as application of mind. Application of mind means what? How how well you're able to toggle your mind in different scenarios. Either you are given a scenario, you try to apply your mind there, or you try to create your own scenarios. So that is the level at which you have to get. Now, everybody is not required to do this at this level itself. But I'm telling you, gradually you start applying your mind into it. Start absorbing the concept. Start thinking in different ways so that you also get these questions. But again, a disclaimer I'm giving. Some people, in order to become more application-oriented person, they spend the entire journey of 4 years CA doing research in CA. What if this happens? What if that happens? Then your CA life is going to be a question mark. So what you're supposed to do? You're supposed to be inquisitive. You're supposed to be application oriented. But first should be your approach towards clearing exam. Then you can become more inquisitive. Whatever answer you're getting, questions instantly like her, you ask. But room ported, you're seeing a good answer. Some people wanted to, Abhi ask this question. No, I'll ask 2 more questions next class. So I'll take 2 hours today. I'll sit and think differently. Don't do that. Instantly, if you're getting the question like this, it is okay. If not, then don't, spend some 10-20 hours for that and separately sit and not required. For instantly getting, well and good. Otherwise, as you go, as you grow, as you become matured, as you understand the subject better, automatically the questions will come. Am I loud and clear? Online people, am I loud and clear? So one more class on liability side of balance sheet. 1 class will be on asset. So 2 more classes will be done with the basic discussion. After that, after 2 more classes, we are going to only do the practical questions from ICA module, MTP, RTP and PEP. So after those 2 balance sheet classes, at least 8 classes further to 10 classes we are going to do only to solve the questions. That many questions are there. And all are big lengthy questions. Am I loud and clear? So today is what? Wednesday. Tomorrow morning, if I keep the class, are you guys available?
Yes, sir.
You have internal tomorrow. Wonderful. Because evening you have tax class tomorrow, so I can't touch it. Saturday morning, how is it? Saturday morning. See, Friday evening I'm keeping the class, no doubt. But I want some extra class also. See, this week your class is next when? Friday. Sunday, 2 classes confirm. But I want to do 1 more class extra. So either you do give me Saturday morning, some morning slots I want.
Friday, Saturday.
Because tomorrow is what? Thursday? Thursday tax class, Friday my class, Saturday evening tax class. So Saturday morning slot can you give me?
Yes, sir.
Cut college 1 day.
Saturday, all your
Sunday morning 1? இதை பார்த்த மனுஷனா தெரியல உனக்கு ஏம்மா பாவம் சார் 7 நாள்ல ஒர்க் பண்ணிட்டு இருக்கா ஃபேமிலிக்கு நான் டைம் கொடுக்க கூடாதா Saturday evening Rajat sir class will be there. Even if Saturday sir is not keeping the class, evening I'll keep, but still I want 1 more class.
Sir.
Extra class.
Friday morning, sir. Thursday morning.
Sunday confirm class is there, no doubt.
Sir, any morning.
Weekday ஒன்னு ஸ்பேர் பண்ணல, weekend எப்படிமா ஸ்பேர் பண்றது? If you say 10 to 2 also I'm willing to do. I'm fully charged up now. I'm just waiting when will I get to the practical questions. I just want to be done away with this theory part faster and quicker. Practical is too good. Too good it is. No, Dhanushri. She's like, sir, where are you getting so much energy from? Passion. Same passion you should have for clearing CA. Kata, Srivatsa, Kata. Voice, correct, no? That's like, panila sir. நீங்க சொன்ன போறோம் பண்ணிடலாம் சார். We'll wrap up. So next class is when? Friday evening for sure. Please discuss and let me know. Saturday morning can I keep on? If possible, Saturday morning 1 session I want. Sunday confirm you're doing. Saturday evening if sir is not taking classes, then I'll take class. So Friday evening, Saturday morning, Saturday evening, Sunday morning is my plan for this week. ஏம்மா இப்படி மூஞ்சி பண்ற? விட்டா நீ அடிச்சு இருக்கு மடிச்சு பார்த்துட்டு இருக்கா நீ. We'll discuss. Okay, let me wrap up this session, guys. That's all from my side for this session. I'll see you all in the next class. Until then, bye bye. See you. Take care. Thank you.
Thank you,
Thank
sir.
you, sir. Thank you, sir.